Hello friends, very good morning everyone. Sorry that yesterday I cancelled the session because my son was not feeling well. Even now his fever is continuing, but it's okay. From yesterday he recovered a lot better, and sorry for that. That's why yesterday, because it was like there was no one to take him to the hospital, so only I was there, so that's why. Okay, fine. Thank you, and we will continue the session. We completed up to the last session about registration requirements. That is registration chapter we completed, and I did not discuss one assignment. That is, I gave you some list of activities related to transportation and whether it is taxable or exempted. So please have a look into this. So this discussion, already an assignment has been shared with you, assignment 2, it is related to that. Passenger transportation, metro travel, is it taxable or exempted? It is exempted. Why? Because metro travel is covered under metro, mono and tramway. So passenger transportation, it is exempted. Passenger transportation, air travel. For air travel, passenger transportation, we have only two exemptions. Starting point or ending point is in northeastern states or Bagdogra in West Bengal, or viability gap funding for a period of 3 years. So only in those two cases it is exempted. In all other cases it will be taxable under FCM. Then, so therefore it is taxable. They did not give which particular air travel. So that's the reason why taxable. Then passenger transportation, radio taxi travel through e-commerce operator. See, if it is normal, then it will be taxable. If it is through e-commerce operator, then e-commerce operator will pay. Suppose if it is normal, supplier only will pay. But whatever it may be, it will be coming under a taxability. Understood? So passenger transportation, radio taxi travel is taxable FCM. If it is through e-commerce operator, then section 9 subsection 5 will come. Then next, passenger transportation, rail travel in sleeper class. We don't have anywhere this taxability. Rail travel, passenger transportation is taxable only in two cases. First class, that is any first class, AC or non-AC, and any AC, first class, second class or 3-tier chair car, etc. So therefore, in other case it will be exempted. Then courier agency service, transportation of goods by road, GT and courier, these two are not covered under exemption. In all other case it will be exempted. So courier agency taxable FCM. Transportation of pilgrims by cable car to the holy shrine situated at the mountain top. See, cable car is nowhere in the exemption. So when we have these railways, so railways, what is exempted? Metro, mono and tramway. But ropeway or cable car is not exempted. Ropeway or cable car is not exempted, that will be taxable. Okay. Whereas if it is given as aerial tramway, what is the aerial tramway? To the hill there is a track. There is a train track. On the top of the hill there will be a pulley, so which will be pulling the train. So if that be the case, then it will be exempted, because all tramways are exempted. But ropeway and this cable car, etc., we don't have any exemption, therefore it is taxable. Transportation of tourists in a ropeway to uphill in Ooty, taxable under FCM. Amount charged from corporate customers by courier agency, taxable under FCM. Hire to state transport undertaking of a minibus that can carry 10 passengers. See, why courier is taxable? Always courier is taxable, whether you provide the service to corporate people or individuals. Hire to state transport undertaking a minibus. So hiring of a means of transport that can carry more than 12 passengers to a state road transport corporation is taxable or exempted? Is exempted, but that should have a capacity to carry more than 12 passengers. But here what it is? Only 10 passengers. That's why it is taxable. If it is more than 12 passengers, then it is exempted. Courier agency collected amount from customers who come to their office, whatever it is, taxable, because courier is always taxable. Passenger transportation, rail travel by general class. Rail travel by general class is exempted. Suppose if it is rail travel by first class AC, any AC taxable, even second class AC taxable, and rail travel by 3-tier AC taxable. Passenger transportation by national waterways. National waterways means inland waters. Transportation of goods or passengers by inland waters is exempted. Then passenger transportation by stage carriage. So AC stage carriage. So stage carriage divided into two, AC, non-AC. AC will always be taxable, whereas non-AC is exempted. Then passenger transportation by non-AC contract carriage. So contract carriage divided into two, AC, non-AC. AC is taxable. Non-AC further divided into two. Tourism or hire taxable. In all other case it is exempted. But here it is for tourism purpose. Therefore it is taxable under FCM. Then transportation of chemical fertilizers by rail. So generally transportation of specified goods by rail is exempted. But in that specified goods we don't have chemical fertilizers. Therefore it is taxable. Transport of defense and military equipment by rail. Yes, it is there in the list of specified goods. Defense and military equipments exempted. Then number 20, a bus meant to carry 40 passengers is given on hire to Andhra Pradesh Road Transport Corporation, and that is exempted because the capacity is more than 12 passengers. Passenger transportation, rail travel in AC train. So AC always it will be taxable. Passenger transportation, travel in a car rented for the whole day on lump sum consideration. It is like normal renting of motor cab, taxable. We don't have any exemption related to that. If it is through e-commerce operator, then section 9 subsection 5 is applicable. If it is through e-commerce operator, then section 9 subsection 5 is applicable. Okay. Then transportation of postal mails and postal bags by rail. It is taxable under FCM because we don't have the list of goods, specified goods, postal bags and postal mails. In that 7 specified goods we discussed, in that list postal bags and postal mails is not there. Then transportation of household effects by rail. Again, household effects is not there in the list, so taxable. Transportation of petroleum products, not there in the list, so taxable. Transportation of relief materials to flood affected areas. Yes, relief materials for natural or man-made disasters is in the list of those specified goods. Therefore, it is exempted. Transportation of newspapers and magazines, same. It is also there in the list of specified goods. Therefore, exempted. Transportation of milk by rail, same. It is in the list of specified goods. Where? Food grains, including flours and pulses, milk and salt, under that point. Then, transportation of rice by rail. So, rice will come under food grains. Therefore, it is exempted. Then, transportation of alcoholic beverages. Alcoholic beverages we don't have. Where we have? In the list of specified goods we don't have. So, therefore, that will be taxable under FCM. Transportation of passenger from Chennai to Gujarat port in a vessel other than for tourism purposes. See, transportation of passengers divide into two in case of waterways. Inland waterways always exempted. Coastal waters within India, tourism purpose taxable, predominantly tourism purpose taxable. Other cases means public transportation, it is exempted. Accordingly, it is exempted here because Chennai to Gujarat other than for tourism purpose. Then transportation of passenger in metered cabs and auto rickshaws is exempted. Then a goods carriage carrying 3 consignments all belonging to different persons at a freight of 1,400 each. So consignment transported in a single goods carriage. So how much it is? Less than or equals to 1,500, therefore exempted. A goods carriage carrying 15 consignments all belonging to different persons at a freight of 500 rupees each, same, less than or equals to 1500, so exempted. A goods carriage carrying 5 consignments booked by 5 different persons but addressed to the same consignee at a freight of 1800 each. Single goods carriage means automatically the 1500 point only will be applicable. So greater than 1500, therefore it is taxable. Sir, who will pay GST? Depends. So GTA has two options, whether to pay GST under FCM or to pay GST under RCM. So it depends. Then a goods carriage carrying 5 consignments booked by 5 different persons but addressed to the same consignee at a freight of 400 each. Single carriage, so freight does not exceed 1500, therefore it is exempted. Then passenger transportation, transport by air conditioned contract carriage, AC contract carriage, always taxable. Passenger transportation, transport by non-AC contract carriage other than for tourism. Non-AC other than for tourism will be exempted. Suppose if it is non-AC for tourism purpose, then it will be taxable. Passenger transportation, transport by radio taxi, whether or not air conditioned, radio taxi will always be taxable here. Okay. Then see the next one. GTA services, transportation of wheat. Wheat will come under food grains including flours and pulses. Wheat flour. Wheat is coming under agricultural produce. Wheat flour will come under food grains including flours and pulses. Therefore, it is exempted. Then GTA services, transport of goods from factory to airport. Is there any specific exemption? No, taxable. GTA services from transportation of goods from factory to land customs station. Do we have any separate exemption like this? No. So therefore it is taxable. Transportation of a consignment belonging to A in a single goods carriage where total freight is 1750. It exceeds 1500, therefore it is taxable. Transportation of consignment belonging to Mr. A not in a single goods carriage where the total freight charged is 600, so it does not exceed 750, therefore it is exempted. Because nowhere it is given in point number 44 that it is a single goods carriage, due to that reason. Transportation of agricultural produce in aircraft. Generally, transportation of agricultural produce is exempted. If it is transported by railways or vessel or even GTA, but for airways we don't have any exemption. So therefore it will be taxable under FCM. Transportation of goods by aircraft from India to outside India, we have an exemption. Airways, India to outside India exempted, outside India to India is also exempted. But vessel, India to outside India exempted, but outside India to India will be taxable. Okay. Then transportation of goods by vessel from India to outside India exempted. Suppose if it is by vessel from outside India to India, taxable. Aircraft from outside India to India, exempted. Transportation of passengers by Ola or Uber, taxable. Who will pay GST? GST will be payable by the e-commerce operator. So these are the 50 situations related to transportation that we have discussed. So now if you have gone through the chart and see these 50 situations, more than sufficient. Beyond this, nothing will be as related to transportation sector. Okay. Now we will move on to the next area in our discussion. In our last class, we completed about registration, and now we need to discuss composition scheme. Please take page number 86. Please take page number 86, composition scheme, section 10. Listen. That is, there are two types of composition scheme. Very, very important topic. So therefore, please listen. I will complete this topic. Whatever is your doubts, etc., everything will get clarified eventually in my discussion. Still, if you have doubts, you can ask me in the break, because right now, so don't disturb me as well as disturb yourself also. So first focus, concentrate. It's a very, very important topic, and this will be definitely asked in the forthcoming exams. That much important topic it is. Okay, it is completely amended and that amended is applicable for you, that's why. Okay, first of all, what is this composition scheme? Now we need to understand the basic difference between normal scheme and the composition scheme. Okay, so now please listen. We are trying to understand the difference between normal scheme and composition scheme. Listen, that is, there is a trader X. That trader X is into normal scheme. That trader X is into normal scheme. Whereas another trader is there, trader Y. And that trader Y is into composition scheme. That trader Y is into composition scheme. Now, both are making purchases. So, purchase price 1000, purchase price 1000, and on which GST is paid. Add GST at the rate of say 12%, that is 120. Now this is the purchase price, correct? Then what is the cost of purchase? What is the cost of purchase? The cost of purchase is not 1120 in case of a person who is opting for normal scheme, because that 120 rupees can be taken as credit. That 120 rupees can be taken as credit. Are you getting this? So as 120 rupees can be taken as credit, so the cost of purchase is only rupees 1000. Reason, rupees 120 can be taken as credit. ITC available. Then sir, what about a person who is opting for composition scheme? With respect to this 120, ITC not available. So what is one important point that we have learnt? Whenever a person is opting for composition scheme, they cannot take ITC on inward supplies. So that's the important point we have learnt. So whenever a person is opting for composition scheme, they cannot avail ITC on inward supply. Then cost of purchase is 1000 for normal scheme trader, whereas trader under composition scheme it is 1120. That is the cost of purchase for a trader under composition scheme. Now to this we need to add the value addition. They will be making some value addition, profit margin, etc. So they will be making some profit margin, value addition. So value addition made by the trader, that is profit. So what is that value addition made by the trader X? Let's take, so 100 rupees, or we will see in a different way. Rather than taking value addition, let's take the sale price, because usually traders will fix the sale price and then they will be arriving at the value addition, their profit margin. So let's fix the sale price. So cost of purchase is over, and what is their sale price? Let's see. Sale price of the trader is 1500. Here also 1500. Add GST at the rate of 12%. So GST at the rate of 12% on 1500 will come to 180 rupees. But here they cannot charge GST to the customer. So this is amount collected from customer. How much is the amount collected from customer? In case normal scheme 1680, but here it is only 1500. Now we have learnt another important point. What is that? So GST under composition scheme cannot be recovered from the customer. Means GST not payable? No, GST payable. GST payable. What is the net GST payable? What is the net GST payable to government? So net GST payable to government. So here 180 rupees they collected as GST from the customer and 120 rupees already they have credit. So net GST only 60 rupees they will pay to government. Whereas here on entire price we need to pay 1% as the tax. So 1% of the tax, so that is 1500 into 1%, that is 15 rupees is payable as tax. So even under composition scheme tax is paid, but tax cannot be recovered from the customer. Tax paid under composition scheme, tax paid cannot be recovered, cannot be recovered, but this 180 can be recovered. Tax paid can be recovered, okay, whereas here tax paid cannot be recovered, understood or not? Whereas here tax paid can be recovered. So net GST payable to government is 60 rupees and there 15 rupees. Now this is the scenario. Now let's analyze their profitability position. What is their profit per unit? So all these are information related to per unit, and now we need to check what will be the profit per unit, okay? So trader X, we will see what is the profit per unit. Profit per unit, please concentrate. Profit per unit, if you see trader X, so how much is his profit? 180 he collected from the customer, out of that 120 whatever he paid on purchase he recovered, so balance 60 rupees he is paying to the government, so that's done. Now 1500 rupees he collected, out of that 1000 rupees is his purchase price, so 500 rupees goes into his pocket, so 500 rupees is the profit per unit. Whereas there, so 1500 collected from the customer, out of that 1500 their cost of purchase is 1120, even they need to pay GST 15 rupees, so that comes to 1500 minus 1120 minus 15, 1500 minus 1120 minus 15, so the profit is 365, the profit is 365. So profit per unit is less in composition scheme compared to normal scheme. Then why the hell, sir, any person will go into the composition scheme? Now let's analyze further. What is the cost to the consumer if he purchases from trader X 1680? What is the cost to the consumer when he purchases from trader Y 1500? So therefore, being a consumer, the consumer prefers trader Y over trader X. So I am continuing further. Trader Y and trader X. Sorry, trader X and trader Y. Now concentrate. What is the cost of purchase? That is cost to consumer. What is the cost to consumer? The cost to consumer here is 1680. They need to pay 1680 to Mr. X, whereas here they are paying only 1500. So therefore the cost to consumer will come down under composition scheme, correct or not? Because of which the sales volume will increase, because of which the sales volume will definitely increase, because there is a difference in the tax. For example, say I am taking classes for you, and in one place I am taking classes to you with GST, okay, so price is 1000 rupees plus GST. Another place it is 1000 without GST. Where will you go? Definitely to that place where I am taking classes for 1000 rupees without GST, because for you it is indifferent, I am only taking classes. So whether this place or that place, I am only taking class. But in one place extra you need to pay GST, other place you don't have to pay GST. So why don't you prefer to go for that place where you don't have to pay GST, correct? So wherever given a choice, we will definitely try to save the GST. Why we will be paying GST out of our pocket? So we usually purchase from unregistered persons for that reason only, to save tax. Because when you buy from a registered person, you need to pay tax, but you buy from an unregistered person, no need to pay tax. Got it? So trader X 1680, trader Y 1500. So sales volume naturally will increase. So in case of trader X, say the sales volume is 1000 units, definitely for trader Y it will be beyond that only, say 1300 units, 400 units I am taking, 1400 units, 1400 units, that is the sales volume. Now you see the total profit. Now you see the total profit, that is, in case of trader X, 1000 into 500, 1000 into 500, that is equals to 5 lakhs is the profit for trader A. Whereas trader B, 1400 units into, what is the price, that is what is the profit per unit, 365. So 1400 into 365, when you take 5,11,000, 5,11,000 means compared to trader X, trader Y is getting more profit. Total. So more profit in total. Even though per unit profit is less. So even though per unit profit is less, if you see here, per unit profit 500 and 365, which is less in case of composition scheme. But when you see total profit, that has just increased in case of a person who is opting for composition scheme. So now tell me, what is the advantage of composition scheme? The advantage of composition scheme is that as there is a reduction in cost to consumer. So what is the advantage? So first we will see the advantages and disadvantages now. Okay, so we completed this discussion. Now we are looking into advantages and disadvantages. Advantages and disadvantages. Disadvantages. Now, first for supplier. First for supplier we will see. What is the advantage of composition scheme to the supplier? So increase in sales volume. Increase in sales volume. That is the advantage mainly. Increase in sales volume. Then another advantage is that compliance cost will come down. What is that compliance cost? A normal person is required to file returns, the two returns on a monthly basis, GSTR1, GSTR3B, and they need to file annual return. Whereas a person who is opting for composition scheme is required to file quarterly statement, a simplified statement, and they are not required to file on a monthly basis. An annual return they need to file. So compared to number of returns which is filed with the government by a normal person, a composition scheme dealer or a person opting for composition scheme, so number of returns come down. Then the frequency of payment of tax also, there it is monthly, normal scheme monthly, but here it is quarterly. So quarterly once only we need to pay the tax. So compliance burden is less. So compliance cost, reduction in compliance cost. Reduction in compliance cost. Even a normal scheme person is required to maintain lot of records, but a person opting for composition scheme is not required to. So reduction in compliance cost. So that is the advantage to the supplier. Then disadvantages we will see. So what is the disadvantage of this composition scheme to the supplier? Concentrate. The disadvantage is that their profit per unit will come down, correct? So ITC not available. ITC not available. ITC not available. Then next, GST cannot be recovered from customer. GST payable cannot be recovered from customer. So this is the disadvantage. Then recipient, to recipient, let's see what is the advantage. There is no disadvantage to the recipient, okay. So recipient will always be happy. So recipient, which recipient I am talking about, B2B or B2C, we need to check. Because if it is B2B, B2C, a recipient, when they are B2B, they are indifferent. There is no advantage, there is no disadvantage. Whereas to B2C, why there is no advantage, no disadvantage? See, in case of B2B, even if they pay GST, they can take ITC. So if they are not paying GST, it's okay. So they will not get any affected. They will not be affected. But if it is B2C, consumer, so what is the advantage? Reduction in cost. So reduction in cost is the advantage to the consumer. Reduction in cost of purchase. Whereas here disadvantage, they don't have any disadvantage. So this is about the advantages and disadvantages of composition scheme to the supplier and to the recipient. Understood or not? So now, sir, is there any way we can increase the profitability of trader Y? Yes, there is a way out. So we can increase the profitability of trader Y by making him purchase from another composition scheme dealer. So whenever trader Y purchases from another composition scheme dealer, there won't be any GST paid on purchase. So therefore, the profit per unit will still improve. But this is the background of the composition scheme. Now, so hope you understood the advantages, disadvantages, etc. of composition scheme. Now we are moving on to, and one more, tax planning also I said. What is the tax planning? Still the profit can be increased by making purchase from another person who is opting for composition scheme, so that the purchase price will be only 1,120 will not be there. That 120 will also be added to the profit. Then, sir, I will increase the price, sir. If you increase the price, then why the hell you go for composition scheme? If you increase the price, why the hell you need to go for composition scheme? If you are also charging the same 1,500, 1,680 like that, then why the customer will come to you? Customer will not come to you. You have to show the difference. And other person is charging GST, I am not charging GST. You have to show the difference. Then customer will definitely come to you. Understood or not? Because here today every person is thinking to save money, and that is so stupid that sometimes what happens, many times it happens at my house. So my wife will be telling to me, we should go for that shop because there compared to MRP they will be giving at 2 rupees less. And she fails to consider the petrol cost. So to go to that place, when it is next to door shop, so it is a walkable distance, we can buy and come. But far away, definitely the car expense will be there, petrol expense is there. So therefore, why we need to go there? And that too, when we go to that shop, we will be saving MRP 2 rupees or 3 rupees, but we will be purchasing lot of unnecessary items. I don't know whether it happens at your house. So because at my house it happens that when we go, we buy something which is really not necessary. So there will be some offers, because once we enter into the supermarket, our hand will not keep quiet, our eyes will not keep quiet. It will just search what are all the products available, and many unwanted things we will be buying and coming. So therefore, this is the business here. So they are trying to reduce the price and they are trying to attract the customers. How much ever educated we are, but we will be falling into the trap of reduction in the price. That's the advantage of composition scheme, nothing else. Got it? Now, This composition scheme is now divided into two, section 10 subsection 1 and 10 subsection 2a. If you are a manufacturer or a trader or a restaurant that is engaged in supply of food, if you are a manufacturer or a trader or is engaged in supply of food, then composition scheme 10 subsection 1. Suppose if you are others, composition scheme 10 subsection 2a. So whenever composition scheme under section 10 subsection 1 not applicable, then 2a is applicable. So 2a is open for all. 2a is open for all. Okay, any person can go for composition scheme 2a. But there is a big difference between 10 subsection 1 and 10 2a. Again I am repeating. So 10 subsection 1 applicable to whom? 10 subsection 1 applicable to manufacturer, trader and a service provider into supply of food. Other service providers, 10 subsection 1 not possible. Please concentrate. 10 subsection 2a is for all others. That is, any person can go into 10 to A, even manufacturer can go into 10 to A, trader can go into 10 to A, supply of food also they can go into 10 to A. So 10 to A is open for all. Now, we are appreciating the differences between 10 subsection 1 and 10 subsection 2A first, okay. So, look into the differences between composition scheme under 10.1 and 10.2A. When it is 10.1, when the aggregate turnover during the previous year does not exceed 1.5 crores, 75 lakhs in case of 8 special category states, then it will be, composition scheme under section 10 subsection 1. What is this? Aggregate turnover during the previous year does not exceed 1.5 crores. Then, or in case of 8 special category states, it is 75 lakhs. Then you are eligible to opt for composition scheme during the current year. So current year whether you are eligible to opt for composition scheme or not depends upon the aggregate turnover during the previous year. But what is the limit for 10 to A? 50 lakhs only. So in case of 10.1 it is 150 lakhs and for 8 states it is only 75 lakhs. But that is beyond 50 lakhs only na. But 10 to A it is only 50 lakhs. Now tell me, compared to 10.1 and 10 to A, which is best? 10.1 is only best. 10 to A is not. And also see the rates, benefit of reduced rates. Third point you see, 1% in case of manufacturer and 1% in case of trader and 5% on supply of food service provider. But if you go to 10 to A, what is the rate? The rate is 6%. Now, no idiot will go into 10 to A when they are eligible for 10.1. No idiot will go to 10 to A when they are eligible for 10.1 because under 10 to A the rate is 6%, whereas under 10.1 the maximum rate is 5% and in other cases it is just 1%. That too the limit is high, 150 lakhs, whereas there only 50 lakhs. So therefore, compared with 10.1 and 10 to A, every person will opt for 10.1 only. And suppose if they are not eligible for 10.1, then they will be going for 10 to A. Sir, what is there, sir? That 1% we pay and collect it from customer, there 6% we pay and collect it from the customer. No, if that be the case, it is okay. But that 1% we need to pay out of our profits. Our sales revenue, and that 6% is payable out of our profits and sales revenue due to that reason. Understood or not? Then, so now look into second point, to whom it is applicable. Manufacturer, trader and service provider engaged in supply of food. There, manufacturer, trader and any service provider not eligible for 10 subsection 1. Now understood? But we prefer 10.1 over 10 to A if it is manufacturer, trader and supply of food service provider, because 10.1 only is better. When 10.1 is not applicable, we go for 10 to A. Got it? Then number 4, fourth point, next page. Current year limit for reduced rates. That is, we pay first during the previous year aggregate turnover does not exceed aggregate turnover does not exceed 1.5 crores. So current year we are opting for composition scheme. Current year, up to what turnover we can be into composition scheme? Up to 1.5 crores, that is 150 lakhs or 75 lakhs, whereas under 10 to A, it is up to 50 lakhs. Sir, what will happen after I cross this limit? After crossing this limit, I will be coming out of composition scheme and will be going into normal scheme. Are you getting this? So, up to the date my turnover does not exceed 150 lakhs or 75 lakhs. During the current year I will be into composition scheme. Once it crosses, I will be going into normal scheme. Same is the case even 10 to A, but the limit is only 50 lakhs. Okay. Now, who cannot opt for composition scheme? 10.1 we are discussing. Who cannot opt for composition scheme? 10.1. So you can see here, consume in. So these people cannot opt for composition scheme. First, casual taxable person. Casual taxable person. So already we discussed in registration chapter who is a casual taxable person. They cannot opt for composition scheme. Means they need to pay GST only under normal scheme. Then outside the state means interstate and outside the country, that is import, held in stock as on the date of opting for composition scheme, but that is not applicable at present. So it is applicable during transition. So not applicable at present. This is applicable only during transition year. So transition from earlier indirect tax law to GST, but it is not applicable now because already we have migrated. So not applicable at present. So even if you are not writing this point, it's okay. Not applicable at present. Even if you are not writing this point, it is okay. But it is there in the rules. That's why I have given this information. Non-resident taxable person, NRTP, we discussed there itself. Who is a non-resident taxable person? Then service providers, whether taxable or exempted, other than restaurant service providers and services up to a limit allowed. Sir, any service provider other than restaurant service provider cannot opt for 10.1 because 10.1 is only for supply of food, correct? Supply of food. So other service providers cannot opt for 10.1. Even up to the limit allowed, they can render services. Sir, what is this limit allowed? Now, just park it here and go back. Just park it here and go back. Please see. So above the differences, there is one heading. Persons opting for composition scheme can provide service up to 10% of the turnover. Okay, so what is that? Previous year turnover. Previous year turnover. 10.1 year, 10.1. See under 10.1, what are the services allowed under 10.1? Supply of food. But they can render any other services under 10.1. They can render any other service under 10.1 up to 10% of turnover during the previous year or 5 lakhs, whichever is higher. 10% of turnover or 5 lakhs, whichever is higher. Now, first they should be a manufacturer. They should be a trader. They should be engaged in supply of food. Apart from that, they can render any other services. Manufacturer, trader or supplier of food, they can render any other service. It need not be connected to their business. They can render any service provided turnover during the previous year. How much value services they can render? Provided that value of services does not exceed 10% of the turnover during previous year or 5 lakhs, whichever is higher. You know why they gave this 10% limit? Being a manufacturer, they will be doing some installation services. So therefore, if you say that you should not do services, then they can never go into composition scheme. Being a trader, they will be providing some delivery services. And if you say that you should not render any service, then a trader can never opt for composition scheme. So due to that reason only, they have given this. But when they gave this, now they are giving relaxation, not just related to their business ancillary services. Any service they can render up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Why higher? Because This is the first year you are starting the business. Previous year turnover will be 0. So 0 into 10% will be 0. That's why minimum 5 lakhs they are giving. Are you getting this? So 10% of the turnover during previous year or 5 lakhs, whichever is higher. Now I cross that limit. I cannot be into 10-1. I cannot be into 10-1. So up to that limit only I can render services. Beyond that I cannot be into 10-1. So that is the meaning of that statement. Now see, service providers, whether taxable or exempted other than A, restaurant service providers, B, services up to a limit allowed. Got it? Then U, purchases from unregistered person held in stock on the date of opting for composition scheme on which GST is not paid under 9(4). But 9(4) is at present applicable only in case of real estate transaction. Correct or not? At present applicable only in case of promoters or builders. At present applicable only to promoters or builders. Okay. At present it is applicable only to promoters or builders. Purchases from unregistered person held in stock on the date of opting for composition scheme on which GST not paid under RCM 9 subsection 4. This is at present applicable only to promoters or builders, so not to any other person. So even this point, if you are not writing in exam, it is okay, but this is there. Okay. Next, M for manufacturer of notified goods. So if you are a manufacturer of notified goods, you cannot opt for composition scheme. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, including aerated waters. Aerated waters means, so waters in which this air will be mixed, which is used for making beverages, sodas, etc. So these are known as aerated waters, and somewhere we come across this list of goods, registration. But in registration we don't have aerated waters. In composition scheme we have aerated waters. Okay. So ice cream, edible ice, pan masala, tobacco and tobacco products we have even there. For what purpose? Higher threshold limit of 40 lakhs is not applicable. Only 20 lakhs limit is applicable. So here also it is there, and even aerated waters. But noteworthy point is that only manufacturer of notified goods cannot opt for composition scheme. If there is a trader of these notified goods, they can opt for composition scheme. So there is a trader of ice cream. Can he go for composition scheme? Yes. But a manufacturer of ice cream cannot opt for composition scheme. Okay. Then next, supplier of goods through e-commerce operator. If there is any supplier who is making supply of goods through e-commerce operator, they cannot opt for composition scheme. I, interstate supplier of goods, whether taxable goods or exempted goods, they cannot opt for composition scheme. So the supply should be completely within the state. Then non-taxable supplies. For example, a restaurant can opt for composition scheme. Restaurant can opt for composition scheme. But that restaurant is having license to sell liquor. So means they are making non-taxable supply. So they cannot opt for composition scheme. So consume in. Okay. So C for casual taxable person. So O for outside the country purchases or outside the state purchases held in stock as on the date of opting for composition scheme. All these things you need to see which year, current year, not previous year. Current year. So even if previous year you are a casual taxable person, but current year normal person, you can opt for composition scheme. Previous year you made interstate supply, but current year you should not make interstate supply. All these are the restrictions for the current year. And as on the date of opting for composition scheme, you should not be having any stock purchased from outside India or interstate purchases. That is O. N, non-resident taxable person. So yes for service providers other than restaurant, that is supply of food, and up to a limit allowed. Then U, purchase from unregistered person held in stock as on the date of opting for composition scheme on which GST not paid under 9(4). Then M for manufacturer of notified goods, that is ice cream, edible ice, pan masala, tobacco and tobacco products and aerated waters. then E for supplier of goods through e-commerce operator, I for interstate supply of goods whether taxable or exempted, and last N, that is non-taxable supplies. So these cases a person cannot opt for composition scheme. Sir, previous year can I make interstate suppliers? Previous year can I make non-taxable suppliers? Previous year I can do anything. These restrictions are only for the current year. Current year you should not have done. Previous year I supplied through e-commerce operator, okay, but current year you should not make supplies through e-commerce operator. All these are conditions of the current year. When you are into the composition scheme, you should not be doing this. Got it? Then, sir, now what is that restriction for 10 to A? Listen, please see the next point. Same page, next point. Difference in conditions. So 10.1 we remember na? These cases consume in. For 10 to A also same. But differences we are trying to understand. In 10.1, they cannot make interstate supply of goods. In 10 to A, they cannot make interstate supply of goods or services. Got it? In 10.1, they cannot make interstate supply of goods. But in 10 to A, it is given as they cannot make interstate supply of goods or services. Actually, we have a separate list for 10 to A. But as it is common for 10.1 and 10 to A, I thought of why we need to discuss it separately. We can discuss it together so that we will remember what are all the differences and we can save the time, and lot of storage space also can be saved. That's fine. So first, interstate supply of goods they should not make, but their interstate supply of goods or services. Here they cannot make supply of goods through e-commerce operator. 10 to A, they cannot make supply of goods or services through e-commerce operator. Then manufacturer of notified goods cannot opt for composition scheme. There it is, manufacturer and trader of notified goods and even some notified services are there, they cannot opt for composition scheme. So here it is manufacturer of notified goods, there it is manufacturer or trader of notified goods, they cannot opt for composition scheme. So that's the difference between composition scheme under 10.1 and 10 to A. Are you getting this? So now we got the clarity as to what is the difference between 10.1 and 10 to A, and look into the heading now. Registered person engaged in manufacture of goods, supply of food, they should go for composition scheme 10.1. Engaged in supply of services other than food, they should go for 10 to A, composition scheme under 10 to A. Done? Understood? Then, sir, only a registered person means is registration a mandatory for entering into the composition scheme? Of course. So, first you need to register, then only you will be into the composition scheme. Sir, in this discussion, we have made discussion related to aggregate turnover. What is the meaning of that aggregate turnover? Aggregate turnover, regular meaning only. What is that? We discussed in registration. First we discussed in taxable event, even we discussed in registration chapter. Aggregate turnover includes all turnovers. That is taxable, non-taxable, exempted, even zero rated, whether it is interstate or intrastate, okay? And it will be computed on an all India basis. And it excludes what? It excludes two. Inward supplies covered under RCM and taxes. These two are excluded from the aggregate turnover. Done? Now, extra point that we have in composition scheme. Aggregate turnover, please see, excludes interest or discount on deposits, loans or advances. That is, which is an exempted supply. We have interest as an exempted supply, na? That is excluded from the aggregate turnover. Now, let's try to understand the meaning of aggregate turnover. This aggregate turnover comes in two different places. First, for registration chapter also it will come. Then, it will be for composition scheme. Same way we have the meaning of turnover also. Okay. So now, please listen. No need to make note, just listen. Anyhow, you will be receiving this sheet, na? So you can refer to that later. If you want to try also, you can write. It's up to you. I am now discussing aggregate turnover. Aggregate turnover. this aggregate turnover, I am dividing into two. First, for registration, and for composition scheme. For registration and for composition scheme. Okay. Now, what will be taken in the aggregate turnover? Let's try to understand that. What will be taken into aggregate turnover? Please concentrate. First, aggregate turnover includes all three supplies. Taxable supply, then exempted supply, and non-taxable supply. So all three supplies are covered under aggregate turnover for registration as well as for composition scheme. Done? Now, so this is the basic meaning of aggregate turnover. Now special points. What about zero rated? Zero rated is also taxable. Come on yaar. Zero rated is what? Exports and supply to, that is also taxable. Will it be coming in aggregate turnover? Yes sir. Zero rated will be coming in aggregate turnover in both the places. Then what about interstate supplies? What about interstate? Taxable or exempted? What about interstate? Even that will also come. But you said when you are making interstate supply, you cannot opt for composition scheme. Hold on. When I said for the current year, previous year I can make, okay. So interstate supplies also will be coming. Then what does it excludes? That we need to know. What does it excludes? Now let's see. Inward supply under RCM. Inward supply under RCM. It will not come in the aggregate turnover. It should not be counted for aggregate turnover. Then GST group. What is that GST group means? CGST, SGST, UTGST, IGST and compensation cess. That should not be coming in the turnover. While computing turnover, it should not come. Then extra one more point is there, that is interest income. That is another point. Please concentrate. Interest income. This interest income is actually exempted, but that exempted will anyhow come under aggregate turnover. So interest income, the discussion is not there here. Aggregate turnover means for registration purposes, whether aggregate turnover interest income will come, yes, means it will be included in aggregate turnover, but for composition scheme it should not be taken. Got it? Interest income should not be taken into the aggregate turnover for the purpose of composition scheme. Then what about the threshold limit? For registration? Means after crossing that you need to register. Now whether that limit should be taken for aggregate turnover composition scheme? Yes. Threshold limit for registration. Threshold limit for registration. Whether we need to take in the aggregate turnover for composition scheme. So yes, we need to take it in the aggregate turnover for composition scheme. Here it is not applicable because we are deciding whether we need to get registered or not. Now, what is the period for which we need to check? That is aggregate turnover for registration. Which period you will be checking? Current year or previous year? Which period aggregate turnover you will be checking? Period. So we need to take the period. So aggregate turnover we need to take current year, whereas here it is previous year. Understood? So aggregate turnover for composition scheme for registration we are discussing now. Registration, which year aggregate turnover we need to see? Current year aggregate turnover. For composition scheme we need to see which year aggregate turnover? Previous year aggregate turnover. Done here. Then next, please see, that is one more point here, one more point, that is, whether it is computed on a state-wise or all India basis. State-wise or pan-India. State-wise or pan-India. So this will be always computed on a pan-India basis, not on state-wise basis. This is computed on a pan-India basis, not on the state-wise basis. So this is the meaning of aggregate turnover, boss. Okay. So now what is that we have learnt? For registration, what is the meaning of aggregate turnover? And for composition scheme, what is the meaning of aggregate turnover? Okay. Now we have something called as turnover also as a definition. Turnover also as a definition. This is what aggregate turnover. Now what I am going to discuss now is turnover, meaning of turnover. So please see, turnover, not aggregate turnover, turnover. Sir, like that we have another definition. Yes, turnover, like that we have a definition. Now, what is the meaning of turnover? Again, why this turnover is relevant? Please take that book. Please take your book and see. Please take that book and see. See the 10% limit. See the 10% limit. That 10% of the turnover during previous year we should take, or aggregate turnover we should take. Please see, 10% of turnover in a state or union territory we should take. So not 10% of aggregate turnover. We need to take 10% of turnover in a state or union territory. So what is the meaning of turnover for 10% limit? For computing 10% limit, what is the meaning of turnover? Okay, please concentrate. We need to take the same way all three. That is taxable, exempted and non-taxable will come, and even this zero rated and interstate will come. Even this inward supply covered under RCM and GST group will not be taken, no doubt. And interest income will not be coming even in turnover. Interest income will not come even in turnover. Then threshold limit for registration. Threshold limit for registration. Whether it will be taken in the 10% limit? Yes. We will take this threshold limit for registration in 10% limit. Period. So turnover we need to calculate for 10% limit. Current year or previous year, boss? Current year or previous year? We need to take previous year turnover, not the current year turnover. See the wording here, 10% of turnover during the previous year. So we need to take previous year turnover. We need to take previous year turnover for the 10% limit. Whether it will be calculated state-wise or across the country, it will be calculated state-wise, not across the country. State-wise. It will be calculated state-wise, not across the country. Are you getting this? So on a state-wise basis it will be calculated. Next. Super, sir. We understood now. One more doubt we have. For computation we have turnover. Please go to the rates. Please go to the rates. Please go to the rates. So benefit of reduced rates is there na? Now 1% on total turnover, 6% on total turnover. What is the meaning of that turnover? Again, turnover only they use, they did not use the word aggregate turnover. So, turnover for computing GST. Turnover for GST computation. For GST computation, what will come? Sir, same sir, taxable supply will come, exempted supply will come, non-taxable supply will come. But when you have non-taxable supply, you cannot make composition scheme, correct? When you have non-taxable supply, you cannot be into composition scheme. So, you should not take this. If you have non-taxable supply, you should not be into composition scheme. So, you should not have it. If you have it, no need to do this computation. No doubt composition scheme not applicable. So, that should not be taken, blank. Then, zero rated, yes, that should be coming. Interstate, it should not be there. If you have interstate supply, you cannot go into composition scheme. So, how it will be having in turnover for GST computation? So, should not have non-taxable supply, should not exist, correct or not? Non-taxable supplies should not exist, should not exist. Then, what about not exist? And what about interstate supply? It should not exist. Okay. Then, inward supply under RCM, it will not be taken into aggregate turnover. The turnover, even GST will not come. Interest income will not come for computation, GST computation. What about threshold limit for registration? No, that will not come. That will not come. That will not come. Because after crossing threshold limit only you need to pay GST. Then period. Turnover for GST computation, we will take current year or previous year. Of course, current year only we need to pay GST. So, current year. And whether it should be calculated across the country wise or state wise. State wise. Turnover is always state wise, not across the country. So, this is the chart which you need to remember here. If you remember this, any kind of question that is asked on composition scheme, you will be in a position to arrive at the answer and without making any error. Okay. Now, look into this. So, therefore, now we got the clarity about the meaning of aggregate turnover and person who is opting for composition scheme, what are the differences in the conditions. Now, how to opt for composition scheme, other provisions and forms, this we will see little later. Let's focus on to some questions so that you will get a clarity as to the computation. So, questions involving computations I am just discussing. So, please have a look into this. Question number 4, page number 92. Question number 4, page number 92. Have a look into this question number 4. It's an RTP May 2020 question. Chanchal started providing beauty and grooming services and inaugurated Care and Care Beauty Center in Janakpuri, Delhi on 1st April. She opted to pay tax under notification number 2/2019 dated 7/3/2019 in the said financial year. Actually, that notification is not there now. Instead, only it will be called as section 10(2)(a). At that time it was there, but now that notification 2/2019 is merged into section 10(2)(a). So, it is merged here, 10(2)(a). And the aggregate turnover of Care and Care Beauty Center for the quarter ending 30th June was 20 lakhs. And further, for the half year ending 30th September, the turnover reached 50 lakhs. Care and Care Beauty Center recorded a rapid growth and turnover reached 70 lakhs by end of October. Determine the total tax liability of Care and Care Beauty Center by the end of October. Now, first, They started providing beauty services on 1st April, which means previous year their aggregate turnover is 0. So when aggregate turnover is 0, current year definitely they can opt for composition scheme. And which composition scheme? Beauty center, definitely 10-1 not possible, so it will be 10-2A, 10-2A. And 10-2A, what is that? We need to check. Rate is how much? 6%, that is 3% CGST and 3% SGST on the turnover. But while computing the turnover, don't take the threshold limit. While computing the turnover, don't take the threshold limit. So whatever is your threshold limit, you take it out. So what is the threshold limit applicable to them? Beauty treatment center, where? In Delhi. What is the threshold limit applicable to them? 20 lakhs. We completed registration, now you will be knowing. So what is the applicable threshold limit to them? 20 lakhs. So up to 20 lakhs, they are not required to pay any GST. Beyond 20 lakhs, they need to pay GST. Correct? Now, my question is, beyond 20 lakhs, are they required to pay GST on 30 or 50? Why 30 or 50? Confusion I am creating, because up to 50 lakhs only they can be into 10-2A. Up to 50 lakhs only they can be into 10-2A. After crossing 50 lakhs, they cannot be into 10-2A. Now, so 20 gone. Now remaining 30. On the 30 only they need to pay GST. That is one view. Another view. On 20, anyhow not there. After 20, we have to calculate 50. They will pay GST. No, that is wrong answer. That is wrong view. We should take aggregate turnover 50 lakhs. Aggregate turnover 50 lakhs. In that aggregate turnover 50 lakhs, 20 lakhs is threshold. Leave it. Don't pay GST. Don't count it for computation. Remaining how much is there? 30 lakhs. On 30 lakhs, you pay GST at the rate of 6%. And once the aggregate turnover crosses 50 lakhs, on remaining, you need to pay GST at normal rates. So, considering that, here up to 20 lakhs, no GST. And beyond 20, that is first quarter, 30th June, April, May, June 20. So for the first quarter 20 lakhs, you need to make the cumulative also, okay? 20 lakhs, cumulative 20, no GST. Second quarter, it reached 50. Means what? Turnover reached 50 lakhs means what? That extra 30 lakhs, it could be, the turnover could be 30 lakhs. It reached 50, means the turnover is 30. Cumulative 50, GST payable on 30 lakhs. That is 1,80,000. How 1,80,000? 6%. Then next quarter, thereafter it reached 70. Means third quarter, what is the number? That number is 20. Extra. So on the 20, GST payable at normal rate. So 18%. So 18% of 20 lakhs, 3,60,000. So this is how GST will be calculated under section 10(2)(a). Got it? So this is with respect to this question number 4 here. Okay. Then Care and Care Beauty Center wishes to opt for composition scheme. From the next financial year, you are required to advise whether it can do so. What is the current year aggregate turnover? While counting aggregate turnover, you need to add threshold limit. What is the current year aggregate turnover? 70. It crossed 50. While calculating aggregate turnover for determining the eligibility to opt for composition scheme, while determining the aggregate turnover to determine the eligibility to opt for composition scheme, threshold limit should be included. So therefore, after including how much it is? 70 lakhs. Even the 20 lakhs should be included. It exceeded 50 lakhs. So therefore, they cannot opt for composition scheme in the next year. Okay. So they cannot opt for composition scheme in the next year under section 10 subsection 1 as well as 10(2)(a). As well as 10(2)(a). Is it clear? Care and Care cannot opt for composition scheme next financial year, and 10 subsection 1 not applicable. Even composition scheme under section 10(2)(a). Please write down. Even composition scheme under section 10 to a not applicable for next year as aggregate turnover of current year exceeds 50 lakhs. Even composition scheme under 10 to a not applicable for the next year as aggregate turnover of current year exceeds 50 lakhs. Okay. So this is how we will be applying the table here. Okay. Then let's have another question. Question number 5. Question number 5. Again it's an old RTP question. I am answering as per the latest provision. Mr. Ajay has a registered repair center where electronic goods are repaired or serviced. His repair center is located in the state of Rajasthan and he is not engaged in making any interstate supply of services. So he has a registered repair center and it is located in the state of Rajasthan and he is not engaged in any interstate supply, means he is making only intrastate supply. Turnover for the aggregate turnover for the previous year is 45 lakhs. Definitely they can opt for composition scheme during current year because first they are making only intrastate supply. Aggregate turnover during previous year does not exceed the threshold limit of 50 lakhs. So what is the limit for composition scheme? 10 to a 50 lakhs. It is not 10-1. Repair center, how it will come in 10-1? It will be 10 to a only and they can go for composition scheme 10 to a. With reference to the provisions of CGST Act, examine whether Mr. Ajay can opt for composition scheme in the current financial year. Yes. Is he eligible to avail the benefit of concessional payment of tax under notification? Now it is 10 to a. They can. Considering the option of the payment of tax available to Mr. Ajay, compute the amount of tax payable by him assuming that his turnover during the current year is 35 lakhs. Turnover during the current year is 35 lakhs. So on the 35 lakhs, we need to pay GST at the rate of 6%. Why are we not taking out 20 lakhs? Why are we not taking out 20 lakhs? Already they are registered. Already they are registered. Please check the question. Already they are registered. Then why in the previous question we took out the 20 lakhs? Because they are getting registered current year only after crossing 20 lakhs. Got it? Because they commence business current year. But in this case they already commenced business during previous year and they are registered. So don't exclude the 20 lakhs and all. So we need to pay GST on entire 35 lakhs at what rate? It is within 50 lakhs. So we will pay GST at the rate of 6%, 3% CGST, 3% SGST. Then will your answer be different if Mr. Ajay procures few items required for providing repair service from neighboring state of Madhya Pradesh? Can they make interstate purchases? Yes. They should not make interstate sales, but they can make interstate purchases. There is no restriction. The restriction is only for making interstate sales. The restriction is not for making interstate purchases. So they can make interstate purchases and on which they cannot avail ITC, but they can make interstate purchase and still they will be into the composition scheme. Okay. So please see, GST will be payable on 35 lakhs into 6% and the answer will remain same even if Mr. Ajay procures few items from neighboring state of Madhya Pradesh. Understood? Now, combining these two questions only, I have given one computation of GST payable under section 10 to a. Please look into page number 90. Please look into page number 90. Computation of GST payable under 10 to a. In case of an unregistered person as on 1/4/2019, that is beginning of the financial year. So, in case of unregistered person as on 1/4/2019, that is beginning of financial year. Beginning of financial year, that person is an unregistered person. Now, up to the threshold limit, no GST payable, correct? Up to the threshold limit, no GST payable. After crossing the threshold limit and up to 50 lakhs, that is difference, balance up to 50 lakhs. Balance up to 50 lakhs. After crossing the threshold limit and up to 50 lakhs means balance up to 50 lakhs. GST payable at the rate of 6%. and supplies after 50 lakhs GST payable at normal rates. Normal rates, okay. Then normal rates on taxable supply, but this 6% will be payable on total supplies. 6% on total supplies including exempted. Total supplies including exempted supplies GST payable. Then supplies taxable or exempted after 50 lakhs GST payable only on taxable supplies. Then suppose in case the person is registered as on 1/4/2019, that is beginning of financial year. Beginning of financial year the person is registered. Then up to 50 lakhs GST at the rate of 6% on total supplies, and beyond that after 50 lakhs GST payable at normal rates on taxable supplies. Understood? So this is with respect to computation of GST payable under 10(2)(a). Those two illustrations are actually answered based on this. So the threshold limit will not be taken into the turnover for computation of GST payable under composition scheme, but for determining the eligibility, we will take. That's what note I have given. Please see. First supply of goods or service or both shall, for the purpose of determining the eligibility of a person to pay tax under this notification, includes the supplies from 1st April of a financial year to the date from which he becomes liable for registration under the said act. But for the purpose of determination of tax payable, it shall not include supplies from 1st day of April of financial year to the date from which he is becoming liable for registration. Okay. So here this table is that much important, and from this table only many questions will be asked. Okay. Now look into other aspects related to that, then we can proceed into the problem like question and answers, other question and answers. Look into page number 88. Page number 88. How to opt for composition scheme? Sir, all good sir. How can I opt for composition scheme? See, from here 10(1) or 10(2)(a) the discussion is same. From here 10(1) or 10(2)(a) the discussion is same. There is no difference in that. How to opt for composition scheme? Now, sir, I am getting registered for the first time, new registration. Now that is, I am getting registered and I want to go for composition scheme. So in the registration application itself, in part B of the registration application form REG1, there will be an option to select. Option to go for composition scheme. If you select, click on that, which means you will be registered and by default you are entering into composition scheme. You are registered and by default you are going into the composition scheme. Suppose if you are getting migrated from the earlier indirect tax regime, that is, you should have filed CMP1, but that is not applicable at present. This is not applicable at present. Then suppose if you are registered as a normal taxpayer, now you want to go into the composition scheme, then you need to file CMP02 before commencement of the financial year as an intimation to opt for composition scheme. Now from this, one important point we can make note, that is, during the year we can never opt for composition scheme unless otherwise we are getting registered during the year. Got it? During a financial year, we cannot opt for composition scheme. Why? Can you tell me? Because if you see CMP02, that should be filed prior to commencement of relevant financial year. So during a financial year we cannot opt for composition scheme unless we are making application for registration. Unless we are making application for registration. Is it clear? So by making application for registration, we can enter into composition scheme anytime. But if you are already a registered person, you can enter into composition scheme only before the commencement of the relevant financial year. Understood? So during a financial year, we cannot opt for composition scheme unless we are making application for registration. Okay? Then, see, whatever I am writing in this, these are all some extra notes or additional notes, etc. And don't ask me to again upload it. Not possible. You are all listening to the lecture. You make note, because some of the students messaged me that, sir, I want all the handwritten, what that is this, not handwritten notes. Handwritten notes I am sharing, but whatever is there in this, everything I want, sir, whatever you are writing on the PDF. Too much here, that's not possible, because it will sometimes be saved, sometimes not be saved, and I don't know. And you better watch the video, and in that video you make note na. So now what's wrong in that? You can make note of it, okay, once again. Or you ask your friends, because I did not write it and save it, that's why. So you ask your friends, so they will be sharing what are all the pages where they have written. You can make note of it, okay. So I don't have that info. Then next, other provisions relating to composition scheme. Listen, we need to display, once a person is opting for composition scheme, 10.1 or 10.2a, this is same. 10.1 or 10.2a, this is discussions is same, okay. So we need to display composite taxable person, and on every signboard, notice, etc. And even on the invoices what we give, clearly we need to mention that composite taxable person, okay, so that the recipient also will know that he is not required to pay GST. Then, what is the validity of composition levy? Once we opt for composition scheme, it is valid till the time the conditions are not satisfied. So whenever the conditions are not satisfied, we will be coming out of the composition scheme. So till the time conditions are satisfied, we will be into the composition scheme. Whenever the conditions are not satisfied, we will come out of the composition scheme. For example, current year up to 1.5 crores, you can be into composition scheme. After crossing 1.5 crores, you need to come out of composition scheme. Then that is every year. Sir, every year should I make intimation for composition scheme? Not required. Once you make intimation for composition scheme, until the time you withdraw, that is valid. Please see. Condition satisfied, option remain valid, no need to file intimation every year. Write that. No need to file intimation every year. No need to file intimation. No need to file intimation every year. No need to file intimation every year. Understood? No need. So once you have made application or intimation for composition scheme, if you are satisfying the conditions, option remain valid. Conditions are not satisfied, then you need to pay tax as a normal taxpayer, and a 7-day window is given for you to make the application for withdrawal from the composition scheme. Sir, what is the form for withdrawal of the composition scheme? That is CMP 04. For withdrawal from the composition scheme, entering into composition scheme, CMP 2. For withdrawal from the composition scheme, CMP 4. Understood? Enter CMP 2, exit CMP 4. And listen carefully, within 7 days, you need to make an application for withdrawal in CMP 4. A 7 days window is given whenever the conditions are not satisfied. Okay? Next. Self-withdraw, that is, conditions are satisfied, but you want to voluntarily come out. In that case, whenever you wish to come out, you can file CMP 04. Why voluntarily we will be coming out? Maybe we are not happy with the composition scheme because we did not get the expected increase in sales volume, or lot of ITC is getting waste. So in that case, we may come out of the composition scheme. when we are breaching the conditions, when conditions are not satisfied, turnover crossing the limit, or we are making interstate supply, or we are making non-taxable supply, or we are making supply through e-commerce operator, in that case conditions are not satisfied. Now, when the conditions are not satisfied, we should have come out of the composition scheme by filing CMP4, correct? Now, what a person did, a person made interstate supply, or a person made supplies through e-commerce operator, and he still continues in the composition scheme. This fact department came to know at a later point of time. Maybe during audit or inspection, etc. they came to know. When they come to know that this fact that this person has made supplies through e-commerce operator or interstate supplies, then from that date onwards he is disqualified for composition scheme, but he will continue to pay GST under composition scheme. So, if the proper officer has reasons to believe that taxpayer has contravened the provisions, they will give a notice asking him to pay tax under normal scheme, and that notice is given in CMP 5, and we need to give a reply to that notice within 15 days in CMP 6, stating that, sir, please forgive us for one time, it is only one transaction that we have made like that. CMP 7, they will pass a order within 30 days, either allowing the composition scheme or rejecting the composition scheme. Understood or not? Either allowing the composition scheme or rejecting the composition scheme. Again, I am repeating the procedure. Please listen. First, they will be giving us a notice asking us as to why we should not pay GST under normal scheme and it cannot be recovered from us. Then we will give a reply to that notice in CMP 6. Then order they will pass in CMP 7. So notice, no time limit. Whenever they come to know, they will give notice, and reply to the notice 15 days. And from that reply to the notice, they will pass an order either allowing composition scheme or rejecting composition scheme within 30 days. Got it? Suppose if they reject the composition scheme, from that date onwards, whatever supplies that we have made, that is from that date when we breached, from that date whatever supplies we have made, we would have paid tax under composition scheme. Now we need to determine what could have been the tax under normal scheme, and that difference we need to pay along with interest and penalty. That is the problem that we have in case of that. Okay. Now, sir, when I am going into the composition scheme and when I am exiting from the composition scheme, some ITC impact is also there. Okay. Now, first look into that concept, that is, when I enter into composition scheme, what will happen? When I come out of the composition scheme, what will happen? Okay. So, concentrate here. Please concentrate. That is, there is a registered person. So, there is a registered person for the financial year 2019-20. So, 2019-20. A person is registered. Okay. So, this details pertain to Mr. Raj, registered person, Mr. Raj, registered person, financial year 2019-20. For that financial year 2019-20, he commenced the business and he opted for normal scheme. He opted for normal scheme and he is a registered person. Now, exactly with effect from 1/4/2020, with effect from 1/4/2020, he want to go into the composition scheme. 1/4/2020 onwards, he want to enter into the composition scheme, that is for financial year 2020-21 composition scheme. Composition scheme. Now, what is that he need to do? That is before this date. So, this date is 1/4. This date is 1/4. Before this date, he should have filed. Before this date, he should have filed CMP 02, correct? File form GST CMP 02. File form GST CMP 02. for entering into the composition scheme. As on 1/4/2020, they wanted to go for composition scheme as on this date. So before this date, any date before this date, file form GST CMP 02. What is that? Intimation to opt for composition scheme. Intimation to opt. Intimation to opt, we need to file. Understood? Then, when we go into composition scheme, during the period when we were under normal scheme, we would have made some inward supplies, and on those inward supplies, we would have availed the ITC, correct? During the time when we were under normal scheme, we would have made some inward supplies. On that inward supplies, we would have taken ITC. Now, we need to take 31/3/2020 before the date. Before the date when we are going into the composition scheme, we need to take inputs lying in stock. Inputs lying in stock. Inputs lying in stock. Then WIP in stock. FG in stock. Even capital goods we need to take, correct? Got it? Somewhere we discussed this section 29 subsection 5. Section 29 subsection 5. Registration chapter. I told you, whenever there is a cancellation of registration, something like this will happen. So let me show you that fact. Wait. So that we discussed na. Somewhere I have written that. Say this. Cancellation of registration. 25/10/2020 cancellation of registration. 24/10/2020 we take inputs, WIP, FG, capital goods, and we reverse the ITC, correct? Same concept we are discussing now. So composition scheme, we need to take before the date, that is 31/3/2020, inputs WIP FG. Now, this WIP, you need to see what is the inputs used in WIP. What is the inputs present in WIP? Then you need to take FG, inputs present in FG. Inputs present in FG. So, these inputs as such held in stock, then these inputs used in WIP, then these inputs in FG, these three inputs, I need to see whatever is the ITC availed. I need to see what is the ITC availed. ITC availed. Same way, for capital goods, what we need to do? For capital goods, we need to take ITC availed divided by 60 into balance life, correct? Do you remember here? Same discussion we made in registration chapter here. So inputs as such in stock, inputs in WIP, inputs in FG, how much is the ITC availed? In case of capital goods, ITC availed divided by 60 into balance useful life. These two ITCs I need to add, and that will be the ITC reversal. ITC reversal. Okay. When I am into the composition scheme, when I am entering into the composition scheme, suppose if there is any balance ITC if any shall be lapsed, which means when I go into composition scheme, I cannot carry forward any ITC. That is the meaning of that. Sir, where is it given, sir? This information is given in section 18 subsection 4. This is just like that section 29 subsection 5, section 18 subsection 4. This information is given. Understood or not? So this is just like that 29 subsection 5 here. This is given in 18 subsection 4. Balance ITs if any shall be lapsed. Okay. Now, how to do the ITC reversal? For this ITC reversal, we need to file one form, that is form ITC03. Form ITC03. So therefore, when I am entering into the composition scheme, I will file a intimation in CMP2 and I need to reverse the ITC by filing a form ITC03. Okay, this discussion you please see here, forms you see. So first you look into that, various forms involved in that you see. Form GST CMP2, when I go into the composition scheme, prior to commencement of the financial year, I need to file CMP2, and whenever I am filing CMP2, I will also file ITC3 within 60 days from the commencement of the relevant financial year. What is that? Details of inputs lying in stock, inputs in WIP and FG lying in stock and capital goods. This is for reversal of ITC on closing stock. So what is the time limit? When it should be filed? Within 60 days from 1st April 2020, which means it will be from April 30 days, May 30 days. So by May 30th, form ITC 03 by 30th May 2020. Within 60 days it should be filed. Now I am into the composition scheme. What has happened? Next financial year I have decided to go for normal scheme. Next financial year 21-22, I decided to go for normal scheme. It's up to me. Who stops? It's up to me, or I can go. So normal scheme. Now, when I was under composition scheme, now what is the procedure for that? When I want to go into normal scheme, say exactly 1/4/2021. Exactly 1/4/2021 normal scheme, and before that composition scheme. Okay, now concentrate. How we will tell that we wanted to go for normal scheme? We need to file a intimation for withdrawal, correct? So before this date we need to file an intimation withdrawal. What is that? File form GST CMP 04. File form GST CMP 04 for withdrawal, correct or not? So I'll just make the change here, 1 second. So before this date I need to file form GST CMP 04 for withdrawal from composition scheme. Now concentrate. When it happens this way, as on 31/3/2020, as on 31/3/2021, there will be some inputs. There will be some WIP, and there will be some FG, and there will be some capital goods on which ITC not availed. Purchased during the year on which ITC not availed. Understood? Purchased during that year, but on which ITC not availed. Why? Because you are under composition scheme, so you did not avail any ITC. Now this, anyhow you are going to use it for normal scheme, so you can take ITC. So inputs, and this WIP has some inputs in WIP, then inputs in FG, so you need to take these inputs as such, inputs in WIP and inputs in FG, and on these three, whatever is the GST paid, on these three, whatever is the GST paid, GST paid. Okay, I paid some GST. Even on this capital goods, I paid some GST, correct? GST paid on capital goods minus 5% for every quarter or part thereof. Every quarter or part thereof. Every quarter or part thereof from date of invoice. From date of invoice, I will take ITC. There I reversed ITC. Here I will take ITC. Here I will take ITC. ITC availment. ITC availment. Understood or not? What, sir? There this ITC availed and this ITC availed I reversed. But what I will do? Here this GST paid and this GST paid minus 5% for every quarter or part thereof. This I will avail as ITC because I am going into the normal scheme. How can I avail this ITC? I need to file a form. That form is Form ITC 01. Form ITC 01. When should I file, sir? I should file it within 30 days from the date I am opting for composition scheme, that is by 30th April 2021. By 30th April 2021, I will be filing this form to take the ITC. Clear or not? Again I am repeating here. Please concentrate. So those both things I am discussing. And where is this given, sir? This discussion is given in section 18(1)(c). Section 18(1)(c). This discussion is given in section 18(1)(c). Please concentrate. Please listen. Sir, there is a person, sir, Mr. Raj, who is a registered person. And for financial year 1920, they have opted for normal scheme. For financial year 1920, they opted for normal scheme. Okay. They opted for normal scheme. And for financial year 2021, composition scheme. Again 21-22, normal scheme. Okay. So now, when they have opted for this normal scheme, they can take ITC on the inward supplies. And with effect from 1/4/2020, they are going into composition scheme. Before that 1/4/2020, they need to file CMP 02, intimation to opt for composition scheme. Then, as on the date, before date, closing stock we need to take, that is 31st March 2020, we need to take closing stock. What is the meaning of that closing stock? Inputs as such held in stock, then inputs in WIP, inputs in FG. These three inputs we need to check how much is the ITC availed. Plus, for capital goods, we need to take ITC availed divided by 60 into balance life. So, this total, these three ITCs, I need to reverse. If I have any balance, that will be lapse, and for this I need to file ITC 03 and by 30th May 2020. Now, this is similar to section 29 subsection 5. So, whatever we discussed here, this 18 subsection 4, that is similar to section 29 subsection 5, which we discussed in registration, cancellation of registration. Cancellation of registration we discussed, na? So, it is similar to that what we have discussed. Then, now we are into the composition scheme. Again next year we are going into the normal scheme. For that we need to file CMP 04, withdrawal from the composition scheme. Now we need to take before that date, that is 31st March 2021, what is the inputs, what is the inputs in WIP, what is the inputs in FG, and whatever is the GST paid, and even capital goods GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. So, we need to take the ITC and in form ITC 01, that will be filed within 30 days from the commencement of the financial year. Please see that. Form GST CMP 4, intimation of withdrawal from the scheme, within 7 days of occurrence of event or normal, and form GST ITC 1 for taking ITC on closing stock within 30 days from the date of conversion. So apart from this, we have CMP 5. CMP 5 is for notice. When we breach the condition, they will give reply to the notice. CMP 6 and CMP 7 issue of the order. Then CMP 8, what is that? Quarterly statement. Whenever a person is opting for composition scheme, they need to file a quarterly statement. Actually, it is not called as return, so it is usually called as statement. Quarterly statement. Quarterly statement needs to be filed by when? By 18th of the month following every quarter, and they need to discharge the GST liability also by that date. So whenever they file CMP 8, by that date even they need to discharge the liability. Understood or not? So then see the procedural complaints. See the procedural complaints here. A person commenced business, and during the financial year 1920 up to 20 lakhs they are not required to pay GST threshold limit. After that they can be into registered and composition scheme, and during the period they are under composition scheme they will be filing CMP 8 and pay GST by 18th of the month following every quarter, and they will also file an annual return. That annual return is in GSTR 4 by 30th April of the succeeding financial year. So a person who is under composition scheme is required to file an annual return, and that annual return is by 30th April of the succeeding financial year, not 31st December of the succeeding financial year. Previously we had something called as GSTR 9A, but that 9A is now abolished. So what is the annual return? GSTR 4 by 30th April of the succeeding financial year. Then thereafter they may either continue in composition scheme or they may switch over to normal scheme. If they continue in the composition scheme, again same data. If they switch over to the normal scheme, from the date when they switch over to the normal scheme, they need to file GSTR 1 outward supply return and GSTR 3B a normal return, and they need to file an annual return in GSTR 9. So they need to file GSTR 3B, GSTR 1 and even regular annual return by 31st December of the succeeding financial year. Okay. Now previously we had something called as GSTR 9A, that is now abolished, not there. Okay, we have only GSTR 4, that is an annual return to be filed by 30th April of the succeeding financial year. Don't forget that point. Denial of composition scheme on account of non-fulfillment of condition. A notice is issued, a notice is issued, and when they issue a notice, we will give reply and they will pass an order to cancel the composition scheme. That cancellation of composition scheme is prospective or retrospective. So it can be prospective or retrospective, but it cannot be before the date we breached the condition. So we breach condition by making supplies through e-commerce operator from that date. Means from that date only they can cancel the composition scheme retrospectively. Please see. So the effective date of such denial shall be from a date including any retrospective date. However, such effective date shall not be prior to the date of contravention of the provisions of CGST Act or rules. Okay. So this is with respect to one circular related to denial of composition scheme. With this, we completed the entire discussion related to composition scheme here. Okay. Now, what we will do, I will be discussing the questions. Meanwhile, whatever doubts that you have, you post it. So those who have doubts, you can post it, and I will be discussing this past exam MTP, RTP questions, and whatever doubts that you have, you can post it there. And thereafter, after completion of this questions discussion, I will be taking up these queries, and even in these questions if you have any queries also you can continue to post. Okay, done. Say this. Question number 1. Enumerate the persons who are not eligible to opt for composition scheme under section 10(2) of the CGST Act. That's what. Who are not eligible to opt for composition scheme, that is actually given in 10(2) only. Who are not eligible to opt for composition scheme. So we remember now that consume in, if you write, that is sufficient. So consume in. So the answer for this is consume in. That if you write, that will be sufficient. Okay. The casual taxable person, if you want to see. So he is engaged in supply of service other than referred to in clause B of paragraph 5. He is engaged in supply of goods not leviable to tax, that is non-taxable supply, interstate outward supplies, then supply of goods through e-commerce operator, notified goods, but we can write even beyond that. Okay, this was given in May 2019. Then question number 2. Messrs. Sai Trading Company, an eligible registered dealer in goods making intrastate supplies within the state of Andhra Pradesh, has reported an aggregate turnover of 78 lakhs in the preceding financial year. Determine whether Sai Trading Company will be eligible for composition levy as on 31/10/2017. So, they are eligible registered dealer in the goods making intrastate supply within the state of Andhra Pradesh. Sir, what are those 8 states, sir? What are those 8 states for which 75 lakhs limit is applicable? What are those 8 states for which 75 lakhs limit is applicable? Now you see that registration chapter, that registration starting, this concept block 7 starting, if you see, I have given there all northeastern states except Assam. All northeastern states except Assam and include Uttarakhand. All northeastern states except Assam. So, total 8 northeastern states are there. Manipur, Mizoram, Tripura, Nagaland, Arunachal Pradesh, Meghalaya, Sikkim, Assam. Exclude Assam. Exclude Assam and include Uttarakhand. Now, in this case, the limit will be 75 lakhs. Then, sir, what about Himachal Pradesh? We learned Himachal Pradesh. No, previously we had Himachal Pradesh. But now Himachal Pradesh will not come under special category state for 75 lakhs. It will be 1.5 crores only. 75 lakhs is only for these 7 northeastern states plus Uttarakhand. For that only it is 75 lakhs. Understood? Then next. So Arunachal Pradesh, Andhra Pradesh is not in that list. So then what is the applicable threshold limit? Is 1.5 crores only. Has reported an aggregate turnover of 78 lakhs in the preceding financial year. Determine whether Sai Trading Company will be eligible for composition levy as on 31/10/2017. Yes, they can opt for composition scheme. During previous year, they have not made any interstate supply and even aggregate turnover does not exceed the threshold limit. Okay. Then, next. Will your answer be different in the above scenario if Messrs. Sai Trading Company makes intrastate supply within the state of Jammu and Kashmir? No. So, there also it will be the same. No change in that. Then, question number 3. Messrs. Handsome and Like Me Company, a partnership firm at Mumbai, is running a mobile phone showroom trader. Along with mobile phone showroom, it is also engaged in providing health and fitness services. Turnover of the mobile phone showroom was 78 lakhs and receipts of health and fitness center service was 26 lakhs in the preceding financial year. With reference to the provisions of CGST Act, examine whether firm can opt for composition scheme. Now, what is their business? They are running a mobile phone showroom. So, during the previous year turnover you need to see. What was the turnover? That too, where are they located? In Mumbai. Mumbai, and turnover is 78 plus 26. So, 78 plus 26, turnover during the previous year is 104 lakhs. Okay, see this. Question number 3. Turnover of mobile phone showroom was 78 lakhs and receipts of health and fitness center 26 lakhs. So total 104 lakhs. 104 lakhs is the turnover. And what is the question? With reference to the provisions of CGST Act, examine whether the firm can opt for composition scheme. Actually, they are rendering services. They cannot opt for composition scheme, but they can opt for composition scheme if they are not going to render services more than 10% of the turnover during previous year. What is the turnover during previous year? 104 lakhs. So 104 lakhs into 10%, 10.4 lakhs. To that extent, if they render services, they can be into composition scheme. Is it clear? But what is the answer that is given is that they cannot opt for composition scheme because here the answer is given on the assumption that the turnover of those services was 26 lakhs in the previous year. So current year, how can we make turnover less than that? But that is also an answer which is possible. Okay. So what is the view we can take? The answer is they can opt for composition scheme if they can render services not more than 10.4 lakhs during the current year. You please write that. You please write that. You please write that. What is that? If they can render services up to 10.4 lakhs during the current year, then they can opt for composition scheme. So if they can render services, this is answer for the first question. If they can render services, if they can render services, if they can render services up to, if they can render services up to 10.4 lakhs, 10.4 lakhs, they can opt for composition scheme. They can opt for composition scheme. So if they can render services up to 10.4 lakhs, they can opt for composition scheme. Like that you write. Why? Because 10% of the turnover or 5 lakhs, whichever is higher. To that extent they can render the services. Okay. Then next question. Will your answer change if the turnover of the mobile phone showroom was 74 lakhs and receipts from health and fitness centers was 18 lakhs during the financial year? So in this case, the answer will remain the same. Correct or not? And up to how much they can render services here? So up to 78, 74, price was 74. So 74 plus 26, no 18. 74 plus 18. 74 plus 18 comes to 92 lakhs. So 92 lakhs into 10%, that is 9,20,000. Up to 9,20,000 if they render services, they can be into composition scheme. So but services during current year 26 lakhs you remove here. But services during current year 26 lakhs you remove. Then next, third one. If Messrs. Handsome and Like Me company obtain separate registration for their mobile phone showroom and for health and fitness center, can it opt for composition scheme only for mobile phone showroom? Listen, when you are having multiple registrations, same person is having multiple registrations, for few registrations they cannot go for composition scheme and for few registrations normal scheme. Either it will be all registrations composition scheme or all registrations normal scheme. Is it clear or not? Now, when they are rendering only services, composition scheme under 10.1 is not possible, correct or not? When they are rendering only services, composition scheme under 10.1 not possible, 10.2a also not possible in this case because turnover during the previous year exceeds the 50 lakhs limit. So which means one registration not eligible for composition scheme means all registrations also not eligible for composition scheme. So that is what you need to write as the answer. Okay. Then question number 4 and question number 5 we have completed. We will be looking into question number 6. But before that, few queries to our friends. Sunil Sam Swiss. Swiss, you are from Switzerland. Sir, in reversal of ITC, that balance life with respect to capital goods should be taken in months or year. Balance life in months. Balance life in months divided by 60 months into balance life in months. Sir, is there any lock-in period for composition scheme? Like once they opt composition scheme, they cannot opt out of a particular period. No, nothing like that. They can enter and they can exit. There is nothing like that called as lock-in period for composition scheme. Okay. Then look into question number 6. Mr. Akash Malhotra of Gujarat often participates in the jewelry exhibition at trade fair in Delhi, which is organized every year in the month of February. Mr. Akash Malhotra applied for registration in January. The proper officer demanded an advance deposit of tax in an amount equivalent to estimated tax liability of Mr. Akash Malhotra. So, often participate in the jewelry exhibition at a trade fair in Delhi, which is organized every year in the month of February. He applied for registration in January. Proper officer demanded advance deposit of tax in an amount equivalent to estimated tax liability of Akash Malhotra. You are required to examine whether any advance tax to be paid by Akash Malhotra at the time of obtaining registration. Actually, this question is related to registration chapter, casual taxable person. Whenever they go for displaying their goods in an exhibition, then they need to obtain registration as a casual taxable person. And as a casual taxable person, when they obtain registration, they need to pay advance tax. And even they cannot opt for composition scheme. Okay. And what is the duration for which they can be getting the temporary registration? 90 days or the number of days that they have asked, whichever is earlier. Suppose if they want to go for extension beyond 90 days, is it possible? Yes, but that cannot go beyond 90 days. Then question number 7. Explain the registration requirements under GST law in the following independent cases. Mr. Ahmed of Jammu engaged in business of supplying tobacco based pan masala with an aggregate turnover of 24 lakhs. That 40 lakhs threshold limit is not applicable because they are engaged in tobacco based pan masala. So therefore in that case it is only 20 lakhs limit. And the turnover exceeds the 20 lakhs limit, therefore they are required to get registered. Mr. Lepcha of Mizoram is engaged in supply of papers with an aggregate turnover of 13 lakhs. So Mizoram, in case of Mizoram, Manipur, Mizoram, Tripura, Nagaland, so the turnover limit will be 10 lakhs. So therefore they are required to get registered. Will your answer be different if Lepcha is located in Meghalaya? Yes. For Meghalaya, the limit will be 20 lakhs. This is also again a question related to registration which we have already discussed. Then look into this. Mr. Jafar of Assam provides the following information for the preceding financial year 18-19. You are required to find out the aggregate turnover for the purpose of eligibility of composition levy scheme and determine whether he is eligible for composition scheme or not for financial year 19-20. Value of taxable outward supplies out of the above 10 lakhs was in the course of interstate transaction. And why we need to determine the aggregate turnover for eligibility of composition scheme? Be careful. Suppose if they are asking turnover for registration, that will be different. Here turnover for eligibility to opt for composition scheme, taxable outward supplies out of about 10 lakhs was in the course of interstate transaction. Let it be, we will take 50 lakhs. Value of exempt supply which includes 30 lakhs received as interest. Interest income will not be taken in aggregate turnover. Correct? Interest income will not be taken in aggregate turnover for determining the eligibility for composition scheme. So from 70 you need to reduce 30. So balance 40 we will take. Inward supplies on which he is liable to pay tax and a reverse charge will not come. Value of exports, it will come. So 50 plus 40 plus 5, that is 95 lakhs, and previous year aggregate turnover does not exceed 1.5 crores. Why? Please see Assam. For Assam, what is the turnover? 1.5 crores. For Assam, it is not 75 lakhs, it is 1.5 crores. So therefore, they can opt for composition scheme during the current year. Then question number 9. Explain in brief the conditions to be fulfilled by a registered person under GST law for availing the option to pay concessional tax at 3% under GST as per the provisions of notification number 2/2019. Same year, that consume in you take, consume in, same consume in you need to write, but only thing remember, whenever you are writing interstate supply of goods, you write interstate supply of goods or services. Whenever you write supply through e-commerce operator, write supply of goods or services through e-commerce operator. Understood or not? Then next, question number 10, examine whether following statements are true or false, giving brief reasons. Is it mandatory to issue a tax invoice in case of a registered person who has opted for composition levy scheme? No. A person who is opting for composition scheme will not give tax invoice because they cannot collect GST from the customer. So they need to give a document called as bill of supply. They need to give a document called as bill of supply. A composition taxpayer who has not rendered any taxable supply during a quarter is not required to file any return. No, they need to file a nil return at least. They need to file a nil return, and even if they are not making any supplies on a quarterly basis. This is not only for person opting for composition scheme, for any person it is the same. Okay. So with this we completed composition scheme year. Registration in the last class, and this class we completed composition scheme. And today I will be giving you assignment number 3, some practice questions on composition scheme. Because we will be getting confused with respect to calculation, how to arrive at the GST payable, etc. So I will give you some practice questions on composition scheme, problematic questions to arrive at the answer. So that will be assignment for today, and you try that, and whatever is the answers for that assignment, I will discuss that in the next class. Okay. So whatever is your doubts, you can continue to ask. So we will take a break. Actually today I took class up to 9:20. Okay, we will take break up to 9:50, half an hour. Now it's 9:20. We will take a break up to half an hour, 9:50, and we will be continuing with other topic. Okay. Now in question number 2, turnover limit of Uttarakhand is given as 1.5 crores. 1 second. Where is it here? However, for Jammu and Kashmir and Himachal Pradesh, I told you now previously for Uttarakhand it is 1.5, that has been changed to Himachal Pradesh. Please change it. Himachal Pradesh. Himachal Pradesh. Previously, that is 2018, it was like that, but now it is Himachal Pradesh. Okay. Anything else? Fine. You just post your queries. After break, we will discuss. Okay, friends. Welcome back. So we will have a discussion related to the questions posted by one student. In question number 8, there are interstate transactions. Okay. So it is part of consuming. That is not current year, na? That is previous year. That's not current year. Current year we should not have interstate supplies. Current year if we have interstate supplies, we cannot go for composition scheme. So these are all previous year data. And current year we are determining the eligibility. So previous year we can have interstate supply, it's okay. But current year we should not make interstate supply. Okay. Then, guys, you don't have any other doubts? Surprising. Fine. Now, let's see the other aspects. So, I said like I will be completing the small topics so that we will be left with valuation and input tax credit, only 2 topics, and with that the entire portion is over. So please look into payment process. Concept block 9, payment process, page number 122. Please have a look into that. Page number 122, payment process. What is this? See, every registered person, for every registered person, GST portal will be maintaining 3 ledgers. For every person, for every registered person, GST portal will be maintaining 3 ledgers known as electronic liability ledger, electronic credit ledger and electronic cash ledger. So who will maintain these ledgers? These 3 ledgers are maintained by GST network with respect to every registered person. Okay, so maintained by GST network, maintained by GST network, maintained by GST network. Okay, with respect to every registered person. And what are these 3 ledgers here? Liability ledger, credit ledger and cash ledger. Now, how money will come into credit ledger? So we will be filing GSTR 3B. So there is one return, GSTR 3B return we will file. When we file GSTR 3B return, we will take the ITC. So that ITC will be reflected in the electronic credit ledger. So whatever is the input tax credit that we report in GSTR 3B, that will be going to the electronic credit ledger. What we can do with that credit ledger? We can make payment of liability. But what liability we can pay? Only tax, but interest, penalty, fee and others we cannot pay. So whenever there is delay in payment of tax, that leads to interest payment. Whenever there is a delay in payment of tax, that leads to interest payment, and that interest provisions are applicable for your exam. Same way, there is penalty for non-compliance. So there are certain offences. Those offences when you commit, you need to pay penalty. Plus, when we file the return late, we need to pay late fee. And others refers to any other amount due from the registered person. So there will be total 5 dues for every registered person. TIPFO, tax dues, interest dues, penalty, fee and others. Interest is for delay in payment of tax. Penalty is for certain offences. Fee is late fee for delay in filing return, and others any other amount due from the person. So these 5 dues are there na. So using electronic credit ledger balance, which dues can be paid? Only tax dues. So there is some balance in electronic credit ledger. Using that balance in electronic credit ledger, can I pay interest? No. Can I pay penalty? No. Can I pay fee? No. Nothing. So using that electronic credit ledger, I cannot pay any due. Understood or not? I can pay only the tax dues. I cannot pay the other dues. Whereas using the electronic cash ledger, I can pay all the other dues. What is that all the other dues means? Tax dues or other dues I can pay using the cash ledger balance. Now against every person there will be 3 ledgers. Every registered person, who will maintain the 3 ledgers? GST network. What are those 3 ledgers? Electronic liability ledger, electronic credit ledger and electronic cash ledger. How money will come into electronic credit ledger? Through GSTR 3B. When we file GSTR 3B, money will enter into the credit ledger, and that credit ledger will be used for payment of what dues? Only tax dues. Is there any other dues? Yes. So interest, penalty, fee and others are there, but for that credit ledger balance cannot be used. Then what balance can be used? Only the cash ledger balance can be used. Only the cash ledger balance can be used. Credit ledger balance cannot be used for other dues. Now that is this. So how plus inflow to credit ledger? Inflow to credit ledger is through GSTR 3B, ITC through GSTR 3B. The outflow of the credit ledger is for payment of liability. Same way. Cash ledger, how there will be inflow? How money will come into the cash ledger? Whenever we make a deposit, whenever we pay tax, so we will go to net banking, e-payment, we will do e-payment of tax through a challan. There is a payment challan. PMT 6 payment challan is there. Through that payment challan, we will deposit the tax. When we deposit the tax, that amount will go to the electronic cash ledger. So we will log in and we will click on e-payment and one challan will be generated. We will type the numbers, how much tax, etc. we need to pay. Once we click on submit, so that much amount, it will go to our net banking, and from there the amount will get debited from our bank account and it will be credited into the electronic cash ledger. So this balance in the electronic cash ledger can be used for payment of liability ledger. That is one inflow. Second inflow, TDS and TCS is deducted by another person, that will also be reflected in the electronic cash ledger of the supplier. For example, when I make supplies through e-commerce operator, that e-commerce operator, when he remits money to me, he will be deducting TCS and he will be remitting. Actually the TCS is my money only. He will pay in my name to government. Same way, whenever I am making supply to government or any public sector undertakings, etc., when they make money to me, when they make payment to me, they will be deducting TDS. They will be deducting TDS, and that TDS, whatever they have deducted, that will be remitting to the government in my name. Now, that TCS and TDS deducted will be credited into my electronic cash ledger, which I can use for payment of my liability. Understood or not? So again I am repeating, concentrate. So there is a concept of TDS and TCS which will be deducted by the recipient whenever recipient makes payment to the supplier. Understood? So this payment of TDS, TCS will be deducted by the recipient and paid to the government on behalf of the supplier, and that money will reflect into the electronic cash ledger of the supplier, which can be used for payment of liability. Then refund. Suppose if there is any excess payment of tax, that refund will be given into my cash ledger. Understood? If there is any excess payment of tax, that money will be refunded into my electronic cash ledger. Now, these are the three inflows into the electronic cash ledger which I can use for payment of my liability ledger. Understood? Now, so whatever is the outflow of the liability ledger and cash ledger, whatever is the outflow of credit ledger, whatever is the outflow of the credit ledger and cash ledger, whatever is the outflow of credit ledger and cash ledger, that is inflow to the liability ledger. Got it? Whatever is the outflow of credit ledger and cash ledger, that will be inflow to the liability ledger, and that is used for payment of tax dues and other dues. Understood or not? So this is with respect to payment process that we have. Now, all these ledgers will have opposite balances. All these ledgers will have opposite balances compared with accounting records. All these ledgers shall have opposite balances, compared with accounts. Okay, what does it mean? It means, listen, input tax credit is an asset that shows a debit balance. How input tax credit is an asset? When we make purchase, what is the entry that we will pass? Purchase account debit, input tax credit account debit to bank. So input tax credit shows a debit balance. When we purchase capital goods, asset account debit, input tax credit account debit to bank. So input tax credit shows a debit balance in our books, correct or not? Whereas with the electronic credit ledger, it shows a credit balance. Then next, whenever we make a deposit of tax, that shows a debit balance, but in cash ledger, it shows a credit balance. Whenever we have some liability, that shows a credit balance to GST payable, sales entry, bank account debit to sales to GST payable. So GST payable, it shows a credit balance, but it shows a debit balance in the liability ledger. Is it clear? So whatever is in our accounts, the opposite balances will be there in the ledgers. Okay. Example, input tax credit ITC shows a credit balance in electronic credit ledger, whereas in accounts it shows debit balance. Okay, that is an example. ITC shows a credit balance in electronic credit ledger, whereas in accounts it shows a debit balance. Okay. Now, what are the form numbers? Liability ledger is PMT1, credit ledger is PMT2, cash ledger is PMT5, and challan. When I make a payment, deposit of tax through challan, that challan is in PMT6. Please see. Electronic liability ledger PMT1, electronic credit ledger PMT2, electronic cash ledger PMT5, and payment challan is PMT6. Now, balance in electronic credit ledger or electronic cash ledger after payment of interest, penalty, fee or any other amount may be refunded. So now I have some balance in the cash ledger, I have some balance in the credit ledger, I used for payment of my tax, still I have some balance, can I get refund? In case of cash ledger, no conditions, it will be given as a refund. But in case of credit ledger, the refund is possible only in two cases. In case of credit ledger, the refund is possible only in case of two. Number one, zero rated supply. What are zero rated supply? Exports and supply to SEZ. Whatever is the balance in credit ledger, I can get as a refund. Or inverted tax structure. What is inverted tax structure means? The tax rate on outward supply is less than the tax rate on inward supply. Remember, not GST payable on outward supply, tax rate. Don't see the value, see the rate. Don't see the value, see the rate. What is the tax rate on outward supply? What is the tax rate on inward supply? For example, my purchases are at 12% raw material. My sales is at 5% finished goods. So it is an inverted tax structure. So rate of GST on output is less than the rate of GST on input. So I will get refund. How much refund I will get? It's too early now. You learn at CA final level. At CA final level you will be learning, not at CA inter level. So refund of cash ledger, no restriction. Refund from credit ledger possible only in two cases. Please look into the third point. Refund from electronic credit ledger is possible only in two cases, that is inverted tax structure, tax rate on output less than tax rate on input, and zero rated supplies. In these two cases only we can get refund from the credit ledger, but cash ledger no restriction. Then how to make deposit through challan? What are the modes of deposit? I can deposit using internet banking, net banking, or using debit card, credit card. But practically debit card and credit card functionality is not yet enabled, but it is there in the law. Credit card, debit card. Then NEFT, RTGS. So I can go to my bank. Suppose if my net banking is not working, I can go to my bank and I can fill a challan and I can give. to transfer. So that is using the net banking, NEFT, RTGS, or cash deposit over the counter. So I can go to the counter and I can make a cash deposit, but how much I can make? Up to 10,000 rupees per tax period, that is per month is permitted. Sir, when I say cash, I also mean to say challan, that is demand draft or check. Okay, so even check or demand draft also covered. So when I refer to cash deposit, this cash deposit includes check. Cash deposit includes check or demand draft. So cash deposit, check or demand draft cannot be beyond 10,000 rupees per month. Then if there is any discrepancy means the ledger balances are not proper. Now I can communicate the discrepancy to the department using PMT4. With the portal, I will communicate using GST PMT4. And suppose if any refund is rejected and the money is credited back to the ledger, in that case they will be giving PMT03. So refund rejection order by the proper officer is passed in PMT03. That is, whenever we claim refund and that refund is paid into the credit ledger, not into the cash ledger, they will be passing GST PMT03. Understood? Then it's not actually refund rejection order, refund order by proper officer is passed in PMT3. For what? For refund into electronic credit ledger. For refund into electronic credit ledger, they will pass a refund order, that is in PMT03. Okay, so this is about the payment process. This is about the payment process, and we have some additional information related to this payment process chapter. So please listen. Additional notes on payment process. Additional notes on payment process. Please concentrate. From exam point of view, that is sufficient, but even some extra information also you should learn, so that I am discussing with you. Please concentrate. That is, we have something called as interest. We have something called as interest computation under section 50. So let's have a look into that interest computation. Interest section 50. Interest section 50. Sir, refund from electronic credit ledger means we can either transfer it to our bank account or withdraw it. No. The money will be credited only to the credit ledger. Means we cannot withdraw or transfer to bank account. We can use it for payment of only any of our GST liabilities. Okay. So the discussion will come and I will discuss that. Please listen first. So now I am discussing the concept of interest under GST. So what is that interest? Listen. Whenever there is a delay in payment of tax, that is non-payment of tax or short payment of tax by the due date, non-payment of tax GST, or short payment of tax, non-payment of tax or short payment of tax by due date. What does it mean? It means by due date, before due date. What is the due date here? What is the due date? The due date is 20th of the following month. 20th of the following month. See, we don't have the concept of due date. We don't have the concept of due date in GST. The due date of filing return is the due date of payment of GST. Is it clear? Due date of filing return is the due date of payment of GST. Due date of filing GSTR 3B. Due date of filing GSTR 3B. due date of filing GSTR 3B is the due date of payment of GST. Okay. So is the due date of payment of GST. Now here non-payment means what? That is, I have to pay tax, I did not pay at all. Short payment means what? I have to pay tax but I paid less. So non-payment means not at all paid. Short payment means paid less is known as short payment. So what is the meaning of short payment? Paid less is known as short payment. Paid less is known as short payment. Understood or not? Suppose if I am required to pay 1 lakh and if I pay less than 1 lakh, say 50,000 or 80,000, that is known as short payment. Non-payment means fully not paid. Then we will be having interest. What is the rate of interest? What will be the rate of interest? So whenever there is non-payment or short payment of tax by due date, then interest at the rate of 18% per annum. Sir, is it simple interest or compound interest? Simple interest only, we don't have compound interest. Simple interest is only payable. 18% per annum simple interest. From when it should be calculated? From when it should be calculated? From first day after due date. From first day after due date till date of payment. Till date of payment. Okay. So when the interest is payable from the first day after due date till the date of payment, interest under section 50 is payable at the rate of 18% per annum. Okay. Now let's have a look into one example related to this. So please listen. One example we are discussing. A Limited is required to pay rupees 4 lakhs of GST, for July 2020, and they paid it on 23rd December 2020. Compute interest. First, we need to see what is the month for which GST is payable. So GST payable for July 2020, 4 lakhs. Due date of payment. So due date of payment is next month 20th. So 20th August 2020. That is the due date of payment. 20th of every month. Because that is the due date of filing GSTR 3B. Then actual date of payment. So what is the actual date of payment? The due date of payment is 20th August and the actual date of payment is 23rd December 2020. Now, what is the period of delay? We need to check. Period of delay we need to check, that is number of days. 20th August means don't count 20th August, count from 21st of August. So therefore in August 11 days, in September 30 days, in October 31 days, in November 30 days, and in December 23 days. So how much it comes to? 11 plus 30 plus 31 plus 30 plus 23, that comes to 125 days delay. Therefore interest equals to, so how much? 4 lakhs is the tax. See, interest will be calculated on tax because tax is only paid late, na? So 4 lakhs into 18% into PTR, principal into time into rate. So into 125 divided by 365. 4 lakhs into 18% into 125 divided by 365, that comes to 24,658. 24,658. So this is how the interest needs to be computed. So at the rate of 18% per annum from the first date after due date till the date of payment of tax. Is it clear? Now this is example number 1. Example number 1. Let's take another example to understand related to ITC how it works. Example 2. Example 2. That is A Limited is required to pay GST of rupees 4 lakhs for July 2020, and they have availed ITC. They have availed ITC of rupees 2,50,000 and paid GST by 20th of August 2020. They paid GST by 20th August, which is the due date. Later it is identified that instead of 1,50,000 ITC, rupees 2,50,000 is availed as ITC. Instead of rupees 1,50,000 ITC, rupees 2,50,000 of ITC is availed. Now they have reversed, that is in the month of December 2020, they have reversed that excess ITC of rupees 1 lakh in the GSTR 3B. In the GSTR 3B, compute interest if any. Compute interest if any. Now listen carefully. What is the liability that they should have paid? See, actually here also there is short payment of tax. How there is short payment of tax? Let's try to understand. First, GSTR 3B they filed on July, correct? So for the month of July 2020, reported in GSTR 3B. What is reported in GSTR 3B? For the same July 2020, what should have been the actual amounts, actual values? First, here the gross liability, there is no change. 4 lakhs, no change here. 4 lakhs and 4 lakhs, no change here. Whereas minus ITC, input tax credit, so here they took 2,50,000 and here it is 1,50,000. So which means their liability should be 1,50,000. Their liability should be 2,50,000, but they have reported as liability 1,50,000. Net liability is 1,50,000. Net liability 1,50,000. Now, what is the short payment of tax? For ITC there is no provision for short payment of tax. What is the short payment of tax for July 2020? 1 lakh, which is nothing but excess availed ITC. Short payment of tax for July 2020 equals to rupees 1 lakh. What is the due date of payment? Due date of payment is 20th August 2020. By that time we should have paid that 1 lakh. But what is the actual date of payment? What is the actual date of payment? Actual date of payment is 20th of January. How 20th of January? Reversed in December 2020 GSTR 3B. So December 2020 GSTR 3B when we will file? By 21st January we will file. So 21st January 2021. So therefore, what is the delay? Period of delay equals to, please listen. So short payment due date is 20th August, but when it is reversed, so whenever we reverse that 1 lakh, it is equal to payment. Whenever we reverse, that is equal to payment. So from 21st August, in August 11 days, September, October, November, December, and in January it is 20 days. So therefore 21 GSTR 3B of December is filed on 21 2021. So 20 days. So that is number of days delay 11 days plus 30 days plus 31 days plus 30 days plus 31 days plus 20 days, that comes to 153 days is the period of delay. Now for that period of delay, interest is payable. So interest equals to, so what is the amount? 1 lakh. So take 1 lakh, multiply with 18% and multiply with 153 divided by 365. So 1 lakh into 18% into 153 divided by 365, that comes to 7,545 rupees will be payable as interest. Understood? So this is how we calculate whenever there is excess availment of ITC, wrong availment of ITC. Example 1 I gave you, whenever there is short payment or non-payment of tax, normal. And example number 2, non-payment or short payment of tax on account of excess availment of ITC. Now we are discussing delay in filing GSTR 3B. Delay in filing GSTR 3B, what will happen? So normal case, in the first case I did not take ITC, now I am taking ITC and I am explaining. Listen carefully. Example number 3. Example 3. What will be your answer in example 1 if? What will be your answer in example 1 if? What will be your answer in example 1 if gross liability of A Limited is rupees 4 lakhs and ITC of rupees 3 lakhs. Okay, now listen carefully. So what will be your answer in example 1 if the gross liability of A Limited is 4 lakhs and ITC 3 lakhs? Actually, what is their net liability? Gross liability is 4 lakhs minus ITC is 1 lakh, minus ITC 3 lakhs So net liability is 1 lakh. Net liability is 1 lakh. So therefore, net liability is 1 lakh. And what is the month due date of payment? Due date of payment is 20th August 2020. Due date of payment is 20th August 2020. Whereas actual date of payment, so this is continuation with the first question. Actual date of payment is 23rd December 2020. Now, why the date of payment is that time? Because GSTR 3B filed late. GSTR 3B filed late because of that reason. Now, interest is payable. Concentrate. Interest is payable. Whether the interest is payable on gross liability or on net liability, that confusion came. In the first example, no such confusion because there is no ITC. Whereas in example number 3, there is a confusion that will come whether GST payable on gross liability or on net liability. So for which law says that we need to pay GST on gross liability. 4 lakhs into 18% into same number of days, that is 125 divided by 365, that is equals to 4 lakhs into 18% into 125 divided by 365, that is 24,658. This will be the interest that is payable. Why, sir, not on net liability? That provision is amended, but that amendment is applicable for next attempt, May 21 exam, not for your exam. For May 21 exam, interest is payable on net liability. That amendment came, but that amendment is not applicable for your exam. For your exam, interest is payable on gross liability. And note, in case of delay in filing GSTR 3B, note, interest payable on account of delay in payment of GST due to delay in filing GSTR 3B, interest payable on account of delay in payment of GST due to delay in filing GSTR 3B shall be computed on net liability. Shall be computed on gross liability. Shall be computed on gross liability reported in GSTR 3B. Sir, only in this case it is like this. Because if you see previous example, their interest is calculated on net liability. So, why, sir, their net liability? That is not on account of delay in filing GSTR 3B. That is on account of availment of ITC, wrong availment of ITC, different situation altogether. Okay. Whereas here it is delay in filing GSTR 3B, because of which when we pay interest, that interest will be on the gross liability, not on the net liability. Is it clear? Then next. Sir, for interest calculation, why are we not taking 366 days? The law says only 365 days. We will not be taking 366 days here. Always for interest computation, the average will be taken as 365 days only. Okay, in GST, always in denominator we take 365 days only. That's an average which we consider. Okay, we will not be taking 366 days for leap year and other period 365 days. divided by 365 only, always. Then few other questions, that is it possible that a person can opt out of composition scheme in the mid of the year? Yes. In the mid of the year they can come out of the composition scheme, but for entry into the composition scheme is only in the beginning of the financial year. Okay. So now this is related to the interest computation here. So this is one additional concept which I have not discussed in or not given in the book, but I am discussing it separately because this interest computation till date questions were not asked. Suppose if at all it is asked, you should be in a position to know it. That's the reason why I discussed this. Okay. Then next, second concept. So what is it we have discussed so far is interest. Now another concept is there, that is excess payment of tax by taking one transaction as the other transaction and vice versa. So let's see that. So payment of tax, that is wrong categorization. Wrong categorization. What is this wrong categorization? Which means that actually the supply, actual supply is intrastate. Actual supply is intrastate, but it is considered as interstate supply. Then what is the tax that has been paid? Tax already paid. What is the tax which is already paid? So intrastate means we would have already paid CGST and SGST. What is the tax payable? What is the tax that is payable? Tax payable is IGST. Tax payable is IGST. Now what is the treatment? Now listen. So the treatment is that first you need to pay IGST. First IGST payable. Pay IGST. IGST you need to pay. Is it clear? IGST you need to pay. And second, get refund of CGST and SGST already paid. Get refund of CGST and SGST paid. Sir, this is when, I realized, if the mistake is realized after filing GSTR 3B. If mistake is realized after filing GSTR 3B. After filing GSTR 3B, we need to follow this. If mistake is realized after filing GSTR 3B, this is the treatment. Then same way, concentrate. That is actual supply is interstate. But I considered it as intrastate. And what is the tax that is already paid? Interstate means IGST would have been paid. But what is the tax that is payable? CGST and SGST. So now what is the treatment? First, pay CGST, SGST. CGST and SGST payable. SGST payable. Second, get refund of IGST. So now in both cases we don't have to pay any interest. So interest is not payable. Is it clear? So as there is wrong payment, note interest is not payable in this case. Interest is not payable in the above two cases. In the above two cases. Is it clear? Next. Then, at the time of filing GSTR 3B, if there is some balance in the electronic cash ledgers, but our liability is in a different place. So, let's see what will happen in that case. So, that is cross utilization in electronic cash ledger. Please concentrate. Cross utilization in electronic cash ledger. Got it? Please listen, first listen. We have electronic liability ledger, sir. We have electronic liability ledger. There will be 4 major heads and 5 minor heads in electronic liability ledger. That is IGST. In electronic liability ledger, there will be 4 major heads and 5 minor heads. IGST, then CGST, then SGST or UTGST, then cess, compensation cess. Like this, there will be 4 major heads and 5 minor heads: tax, interest, penalty, fee and others. So, there will be 5 minor heads. There will be 5 minor heads, okay. Same way we will be having in electronic cash ledger also. So, like how we have in electronic liability ledger, the same way we will be having in electronic cash ledger also. Okay. So, one second. So, TIPFO, I am just reducing the columns. So, like how we will be having these 5 cells TIPFO. So, same way even we will be having it in the cash ledger. Okay. So, this is electronic cash ledger. Electronic cash ledger. Electronic cash ledger, we will be having TIPFO, electronic liability ledger also, it will be the same. Now, I made some deposit in the cash ledger. How I will make deposit? Deposit through challan, payment challan, that is PMT 06. I made some deposit through payment challan that gets reflected in cash ledger, and cash ledger is PMT 5, whereas liability ledger is PMT 01. Now, listen carefully. In the cash ledger, when I made a deposit, I deposited 10,000 rupees in the IGST as tax, whereas my liability is 5,000 CGST and 5,000 SGST. Actually, at the time of making deposit in the payment challan, I deposited 10,000 rupees in the cash ledger, but actually my liability is 5,000 CGST, 5,000 SGST. Now, what can I do? Can I make a cross utilization? No, because previously it was disallowed, but now I can. What should I do? Now, when I file a payment challan, when I file a form PMT 9, there is one new form introduced. This is an amendment. Please listen. This is an amendment. There is a new form that is introduced. So now this 10,000 rupees I can shift to CGST and SGST I can shift. How I can shift, sir? By filing one form I can shift. So that form is PMT 09, a new form that is launched. A new form that is launched, that is PMT 09. Through that new form, what can happen? The balance in IGST can be shifted, but this is only at the time of filing GSTR 3B. The previous one what I have discussed is after filing GSTR 3B. This is before filing GSTR 3B. Before filing GSTR 3B, okay. Before filing GSTR 3B, if there are some balances in the electronic cash ledger, this is after filing. The previous discussion is after filing GSTR 3B. This discussion is before filing GSTR 3B. When I have some balances 10,000 rupees in IGST, but my liability is 5,000 CGST, 5,000 SGST, I can shift the balances by filing PMT 9 challan. Understood? So now, is it the same way, sir, or I can use between other head to this head also? For example, you see, that is, I have some penalty, 10,000 rupees, okay, 3,000 rupees under penalty, some 3,000 rupees under SGST. But here IGST I have to pay penalty 3,000, or interest I have to pay 3,000. Interest I have to pay 3,000 under IGST, but it is there under SGST. What should I do? Simple, same way. I file a form to transfer balance from this place to this place. From this place to this place I will transfer the balance. How? Same using PMT 9. Same using PMT 9. PMT 9, I will transfer balance from SGST penalty to IGST interest. Got it? SGST penalty to IGST interest I can transfer. So cross utilization of funds between 20 cells is now possible. So cross utilization between minor heads and major heads is now possible, okay, through PMT 9. Make note of that. Note, cross utilization of balances. Cross utilization of balances between. See, this is a latest amendment applicable for November 2020 exam, okay. Cross utilization of balances between between major heads and minor heads. Between major heads and minor heads. Possible cross utilization of balances between major heads and minor heads possible through form GST PMT 09, through form GST PMT 09. So this is a latest amendment, okay. So to explain this only, I explained the previous concept. So because you may get confused, so that's why I explained. Now also still you will have one confusion. Sir, generally IGST credit can be used for payment of any liability, na sir. That is for credit ledger. This is for cash ledger. That is for credit ledger, which I am going to discuss now. Concentrate. So cross utilization in the credit ledger. Cross utilization in the credit ledger. Please concentrate. What is that? That is, I have some liability ledger balance. So number 4, cross utilization in electronic liability ledger. Listen, please listen. Cross utilization in electronic credit ledger. electronic credit ledger, how the cross utilization happens. Now, I have electronic liability ledger. I have electronic liability ledger IGST or CGST, then SGST or UTGST. Then even I will take UTGST separately only, okay, UTGST, then IGST. It is there in my electronic liability ledger. Then even cess, where is it? In my liability ledger. Then in my credit ledger, in my electronic credit ledger, there is CGST, SGST, UTGST, IGST and cess. IGST and cess. Now, what will happen? Let's analyze. What will happen? Let's analyze. That is, so please listen. So when I have liability, can I use credits for payment of my liability? Can I use credits for payment of my liability? That's the discussion which I am making now, okay? So I have some credit balance in the cess. I have some credit balance in the cess. I will start with cess first. I have some credit balance in the cess. Can I use it for payment of any liability? No, I cannot use it for any liability. I should use it only for payment of cess. I have some credit balance in the cess. Can I use it for payment of any liability? No. That cess can be used only for payment of cess. That's it. Okay. Then, can any credit be used for payment of cess? No. Any credit cannot be used for payment of cess. Means cess can be used only for payment of cess. Very simple. Nowhere the cross utilization is possible. Cess can be used only for payment of cess. Done. Then next, IGST we will take. I have IGST credit. Can I use it for payment of CGST? Yes. SGST? Yes. UTGST? Yes. IGST? Yes. Okay. Same way, any credit can be used for payment of IGST liability. Any credit can be used for payment of IGST liability. Then next, I have CGST credit that can be used for payment of CGST liability, SGST credit for SGST liability, UTGST credit for UTGST liability. But cross utilization between these three, not possible. Cross utilization between these three, not possible. So only respective credit can be used for payment of respective liability. But in case of IGST, we don't have that. So IGST can be used for payment of any liability and any GST credit can be used for payment of IGST liability. This is only for taxes. Interest, penalty and all, it is not possible because credit ledger balance cannot be used for payment of interest, penalty, fine and others. Is it clear or not? Now, how can we easily remember this, sir? This can be remembered in, 2 points actually. Number 1, this is principle number 1 that we are remembering. Rule 1, remember rule 1. What is that rule 1? 2 points are there in that rule 1. There is no restriction in case of IGST. No restriction in case of IGST. What does it mean? No restriction in case of IGST, which means IGST credit can be used for payment of any GST liability and IGST liability can be used for payment, IGST credit can be used for payment of any GST liability, correct? Same way, any GST credit can be used for payment of IGST liability. There is no restriction in case of IGST. Next, between CGST, comma, SGST and UTGST, respective credit for respective liability. Respective credit between CGST, UTGST, CGST, SGST, comma, UTGST and cess, respective credit for respective liability. Respective credit for respective liability between CGST, SGST, UTGST and cess. Sir, can cess be used for payment of IGST? No. Cess credit cannot be used for payment of IGST. Cannot be used for IGST. Cannot be used for IGST. Is it clear? Cess credit cannot be used for IGST. This is what you need to remember in rule 1. Then rule 2. Rule 2. Sir, you are telling cess. What is that cess, sir? That is GST compensation cess. GST compensation cess. We discussed in introduction chapter. So generally when central government wants to compensate to the states because of loss of revenue on account of GST, they will be collecting some money from the people across the country by levying cess on some notified goods. So that cess collected by the government and given to some states as compensation is known as GST compensation cess. Okay. So this is about rule 1. Can you remember this? There is no restriction in case of IGST, means IGST credit can be used for payment of any liability and any credit can be used for payment of IGST liability, but cess cannot be used for payment of IGST liability. Then we have something called as CGST, SGST, UTGST and cess, respective credit for payment of respective liabilities. Then rule 2, that is priority. What is that priority? Please see. So I have IGST credit. What is the priority? So first use it for. So what is the priority of IGST credit? First use it for IGST payable. First use it for, I have IGST credit. First use it for IGST payable. Then I can use it for payment of, CGST or SGST or UTGST payable in any manner, in any proportion, and in any proportion. Any manner and in any proportion I can use. Then next I have CGST or SGST or UTGST credit. First priority for what? That liability. First for that liability. What does it mean? Means CGST for CGST liability, SGST for SGST liability, UTGST for UTGST liability. Second priority for what? IGST payable. Second priority for IGST payable. Clear? Then rule 3. Please listen. Rule 3. That is before using CGST SGST credit. Before utilizing CGST SGST credit. Before utilizing CGST or SGST or UTGST credit, comma, ITC with respect to IGST should be fully exhausted. Should be fully exhausted. What does it mean? Means fully it should be used. Then only you should touch CGST and SGST credit. Then rule 4, last rule. Rule 4. What is that rule 4? For payment of IGST, we have multiple credits. We have multiple credits and one liability. So we have, say this, IGST credit, We have IGST credit, CGST credit, etc. like that we have. So please see, we have IGST credit, then CGST credit, SGST credit, UTGST credit. Now I have IGST payable. I have IGST payable. What will I do? Now first use IGST for payment of IGST. Then use CGST for payment of IGST. Then these two you can use it for payment of IGST. So first use IGST credit for payment of IGST, then CGST for payment of IGST, then SGST or UTGST for payment of IGST. So these are the 4 rules that we have, 4 rules or 4 principles, anyway you can remember for the purpose of cross utilization in electronic credit ledger. Actually this information I have given in a different way in input tax credit chapter. If you take input tax credit, page number 47, there I have given. In input tax credit chapter I have given this information, manner of utilization of credit, there I gave this information, okay. So now look into one illustration below the table there is one illustration, have a look into that illustration, please concentrate. We have GST payable on outward supply 5,000, 5,000 and 5,000, GST paid on inward supply 2,000, 2,000 and 10,000. Now listen, the 10,000 rupees of IGST credit should be first exhausted fully, correct? The 10,000 rupees of IGST credit should be first exhausted. So if you exhaust 10,000 and that to priority, so what does rule 3 says? First I need to exhaust the IGST credit completely. So for exhausting what should I do? Priority, rule 2, priority rule 2. Rule 2 says first use it for payment of IGST. First use it for payment of IGST. Still how much balance is left? 5,000 we have. That 5,000 we can use it for payment of CGST, SGST in any manner, correct? That 5,000 can be used for payment of CGST, SGST in any manner, in any proportion. Means multiple answers exist, sir. Multiple answers exist. But we need to do tax planning here. That is, suppose if you use 5,000 for payment of CGST, entire 5,000 you use it for payment of CGST, what will happen? CGST credit 2,000 can be carried forward because that 2,000 cannot be used for payment of SGST credit. Then SGST 5,000 we will have, 2,000 we will use. So we will be ending up payment of 3,000 rupees as liability of SGST and CGST 2,000 we will carry forwarding. It's too much waste. Suppose if I use 5,000 for SGST, what will happen? Same situation. SGST credit cannot be used for payment of CGST liability. So that SGST will be carried forwarding and CGST 3,000 rupees we need to pay. Then this 2 leads to payment of 3,000 liability and 2,000 credit carried forward. Instead, we can do one way. Distribute the IGST credit equally between CGST, SGST, 2,500, 2,500. Sir, should it be equal? No, it need not be equal. In any manner, in any proportion we can distribute. It need not be equal. In any manner, any proportion we can distribute. It need not be equal. So I distributed it between CGST and SGST. 2,500, 2,500. Now what will happen? After IGST credit, the balance will be 2,525. After utilizing IGST credit, the balance liability will be 2,525 and we have 2,000 of CGST, 2,000 of SGST. Use that also. Then the net liability will be 500 and 500. So we did a tax planning here. So we need to reduce the cash outflow. That is the objective, clear? In exam, they may give different question also. In exam, they may give yet another question also. But you should be careful and try to minimize the liability. Net cash liability or net GST liability should be minimized. The cash outflow should be minimized. That should be the objective. Clear or not? So this is what this type of questions you can get in exam related to that like credit ledger, how it will be set off. Okay. So we completed now, and one more aspect is there, one more aspect. With that we will be completing payment process. Point number 5. Point number 5, that is refund into the source ledger. Refund into source ledger. So now we have this concept, refund into the source ledger. What is that? Listen, for a particular month, say September 2020, we filed GSTR 3B. We filed GSTR 3B. In that gross liability, we filed GSTR 3B. So gross liability is 5 lakhs. So how this 5 lakhs is paid? Through electronic credit ledger. Through electronic credit ledger, we paid 3 lakhs. And through electronic cash ledger, we paid 2 lakhs. We paid 2 lakhs. Okay. Then for this period, what has happened? With respect to one invoice, we paid excess tax. With respect to an invoice, we paid excess tax of rupees 15,000. We paid excess tax of rupees 15,000. Got it? So we will make a refund application. So we will file a refund application. File refund application. When we file refund application, then refund is sanctioned. So refund is sanctioned. You know what? So when refund is sanctioned, what will happen? This money will come into the electronic credit ledger and electronic cash ledger. They are not going to give, they are going to give refund, but they will be dividing it into two, electronic credit ledger and electronic cash ledger, that is from directly to the bank account. Directly to the bank account they will credit. Bank account of registered person. But here they will not be crediting to the bank account of the registered person, where in credit ledger. Now, sir, 15,000 we paid. This 15,000 will be created to the electronic credit ledger by issuing PMT3. There is one new form we learned, PMT3. PMT3, they will be transferring into the credit ledger. How much, sir? How much? Please concentrate. 15,000 is the refund. 15,000 for that month. How you paid? How you paid? In what ratio you paid using credit ledger and the cash ledger? 3/5 credit ledger. So therefore 15,000 into 3/5 given into the credit ledger, that is 10,000 will be given into the credit ledger. And 10,000 so 3/5, 15,000 into 3 divided by 5, 9,000, sorry. So 9,000 will be given into the credit ledger, and here, so 15,000 into 2/5 is paid into the bank account of the person, that is 6,000. Understood? So this money which is there in the credit ledger, what we can do, this 9,000 can be utilized for payment of, this 9,000 can be utilized for payment of any GST liability, can be used for payment of future liability. Okay. Now this is the amendment. So this is the amendment here. Previously it was not there. and now this is the amendment. Okay. Previously full amount was sent into the bank account, but now they are refunding it to the source ledger through PMT03. That's it. These are the 5 special aspects related to this payment process which I have not given in the book, and you need to learn, because these are all topics which are not that important for exam, but as I have to cover, so I am covering that also. Then you please take payment process over returns. See the next chapter, that is returns. Please take that. Returns and overview, please see. See this. There are various types of returns. There are various types of returns which we are discussing now. During the life of a registered person, during the life of a registered person, they need to file a first return. They need to file a first return immediately after the registration. And in that first return, they need to show the details of outward supplies from the date they are liable to get registered till the date certificate of registration is granted to them. That is, say this, in last class we discussed in registration one concept called as revised tax invoice. So please see, this is the question, this is the situation that we discussed in the last class. So from 5/7/2021 to 5/8/2021, from 5/7/2021 to 5/8/2021, there will be some outward supplies, and those outward supplies needs to be reported in the first return that will be filed after July. For July we will be filing first return when certificate is granted in that question. So the certificate is granted on 5th July. So 5th July means for July month you will file return, not only July month data but also the previous month data, that is August month, sorry 5/8. So you will be filing return for August month. So when you file the return for August month, not only August month data but also July month's data from 5/7 we will be reporting in the first return, because we need to pay GST on that, we need to report. Got it? Sir, even if the application is not made within 30 days, the same scenario, yes. Whether you made application within 30 days or you did not make application within 30 days, we need to follow the same. That is, from the date we are liable to register till the date we get certificate of registration, we need to report those transactions in the first return which will be filed for the month in which registration is granted. Okay? So that is the concept of first return. Please see. When registration is granted after the date when a person is liable, he has to file first return. The date from which he or she liable for registration till the date on which registration has been granted, all data should be reported in the first return. That there is something called as final return. There is something called as final return. What is that final return? That is, registered person whose registration has been cancelled, shall furnish a final return within 3 months from the date of cancellation or date of order of cancellation, whichever is later. Okay, read that carefully, and that final return is to be filed in GSTR 10. Now we will take one example to understand this concept of final return. So please listen. So you read it, just we will look into one illustration related to that final return. Okay, we'll make note. So on final return, I am just discussing now two illustrations. So you should know as to when the final return needs to be filed. So please listen. Illustration on final return. Illustrations on final return. Please listen here. First, a registered person made application for cancellation of registration. We discussed registration already. So registration, a registered person made application for cancellation of registration on 25/11/2019 by selecting the date of cancellation as 1/12/2019. A registered person made application for cancellation of registration on 25/11/2019 by selecting the date of cancellation of 1/12/2019, and proper officer, there are two types of cancellation. Either voluntarily they can make application for cancellation, or proper officer suo motu can initiate cancellation. So a registered person made application for cancellation of registration on 25/11 by selecting the date of cancellation of 1/12, and the proper officer passed order for cancellation on 2/1/2020. What is the date by which final return to be filed? What is the date by which final return to be filed? Okay. Now read the provision, you try, and I will explain the answer, you cross check. Okay. Read the question, read that concept, you try, I will explain the answer, you cross check that answer. First, date of cancellation. What is the date of cancellation? 1/12/2019. From there 3 months. That is 1/3/2020. Then order of cancellation is 2/1/2020 plus 3 months equals to, that is 2/4/2020. Whichever is later, that is 2/4/2020. Wrong answer. We should not take this 3 months. We should not take this 3 months for the order of cancellation. We should take the 3 months only for date of cancellation. We should not take the 3 months for order of cancellation. Only for a date of cancellation we should take. So 2/1/2020. Whichever is later, that is 1/3/2020. 1/3/2020 is the time limit by which we need to file the final return. Then another question. Question number 2. A registered person's registration is cancelled. By the officer retrospectively. See, I told you cancellation can be prospective or cancellation can be retrospective. So by the officer retrospectively with effect from 25/12/2019 by passing an order for cancellation on 15/3/2020. What is the date by which final return to be filed? What is the date by which final return to be filed? We need to take date of cancellation first. What is the effective date from which cancellation is given retrospectively? 25/12/2019. Date of cancellation. So the date of cancellation is 25/12/2019. You take plus 3 months there. So that comes to 25/3/2020. Then order of cancellation. Directly you take, don't add anything, that is 15/3/2020. Whichever is later, that is 25/3/2020 is the time limit by which the cancellation order, that is the final return to be filed. Okay. So this is with respect to final return here. So what is the final return form? GSTR 10. So during the life of registration, first return, final return GSTR 10. Now during the life, what are the returns that they need to file? We are discussing. During the life, what are the returns that they need to file? We are discussing. Please listen. Regular scheme, composition scheme. And composition scheme. If they are into regular scheme, they need to file periodical return and annual return. If they are into regular scheme, they will be filing periodical return and annual return. What is that periodical return? If the turnover during the previous year does not exceed 1.5 crores, please see the table. If the turnover during the previous year does not exceed 1.5 crores, then they need to file GSTR 1 on a quarterly basis by the notified dates. Whereas when the turnover during the previous year exceeds 1.5 crores, please check the table, they need to file GSTR 1 on a monthly basis. What is the difference between GSTR 1 and GSTR 3B? So this can also be asked as a question. Can be asked as a question. So I am just discussing that concept, please see. So possible that question can also be asked in exam. So now we are finding the difference between GSTR 1 and GSTR 3B. Please concentrate. GSTR 1, GSTR 3B. What is the differences? First, we need to know the details. Details furnished. What details are furnished in GSTR 1? Details furnished. What details are furnished in GSTR 1? See, all these are extra topics here. Only for the reason that, I know that this is not a regular batch, but I am discussing this because as I started, I want to give full information, whether you take it or not, because nook and corner, whatever can be asked in exam, everything I am discussing with you. So when I want to give a meals, that should be full meals. I don't want to give plate meals or limited meals or even mini meals and leave you. I want to give you full meals. So that's the reason why I am giving you everything, because I know that you bank only on GST, and so in GST if you can score good marks, automatically you will be clearing. That's the reason why. Okay. Now please see this. There are few queries related to some discussion so far we have made, and that discussion, like whatever queries we will complete and then we will go back to this. Sir, in example 2, why should we avail only 1.5 lakhs if we have 2.5 lakhs in electronic credit ledger? So our friend is asking some question we completed some hours before. Arunesh Shankar. Actually, we are not taking 2,50,000 rupees credit. Actually, the credit that we should have taken is only 1,50,000, but we took in the ledger 2,50,000. The credit that we are eligible is only 1,50,000, but we took 2,50,000 credit in that. Okay. So your question is wrong. Please read the question carefully. You will understand. Okay. Maybe you got confused. Sir, in wrong categorization, I think you have, correct, I changed it, na? Tax already paid, fine. So, first one is considered as intrastate, but actual it is interstate. So, tax already paid is CGST, SGST, and actually is IGST. Now you will not get confusion. Sorry, while explaining I explained it, but when I have written it wrongly. So please make the change if you have written. So I have considered it as intrastate, but actually it is interstate. So whatever I have already paid is CGST, SGST. What I should pay is IGST. Okay. Then yes, that is considered. Sir, while we file returns for monthly or quarterly, then what is the relevance of annual return? I'll tell you, I'll discuss that, because still I did not come to the discussion. I'll discuss that. Listen, GSTR 1 and GSTR 3B are the two returns which needs to be filed by every person, every registered person. And what are the details to be furnished in GSTR 1? Outward supplies. Only outward supplies we will furnish, only outward supplies. Then in GSTR 3B what we furnish? Outward supplies, inward supplies, inward supplies, outward supplies, inward supplies, outward supplies, inward supplies. Then gross liability, ITC, input tax credit, and GST paid. So this data we will be mentioning in GSTR 3B. These are the details to be furnished. Next. Number 2. Frequency. What is the frequency in which GSTR 1 is filed? Two frequencies are there. Quarterly or monthly. We have two frequencies. Quarterly or monthly. When it is quarterly, so aggregate turnover during previous year less than or equals to 1.5 crores, then quarterly. Aggregate turnover during previous year exceeds 1.5 crores. Aggregate turnover during previous year exceeds 1.5 crores, then monthly. Sir, any date notified, sir? Notified dates, you remember. Notified dates. What about monthly? 10th of the month following every month. Okay, but actually now they have changed it to 11th. 11th of following month. 11th of following month. See, in study material, it is given as 10th. But you remember it as 11th. 11th of the month following every month. In study material it is given as 10th, but you remember it as 11th because the dates have been updated to 11th. Then next, GSTR 3B. What is the frequency? Always monthly. Always monthly by 20th of following month. By 20th of following month. This is GSTR 3B frequency. Then next continuation, GSTR 1, GSTR 3B. Then we will see information, that is what level of information will be there in GSTR 1. So in GSTR 1, invoice wise information. So whereas in GSTR 3B, summary information, means you will not be having invoice wise. So there will be only summary. How much is the total outward supply? How much is the total inward supply? How much is the total ITC? Like that summary information will be there in 3B. Then next, another point. So whether any tax is payable, whether tax payable along with return, whether tax payable. So along with filing GSTR 3B, at the time of filing GSTR 3B, GSTR 1, tax payment not required. Tax payment not required. Then GSTR 3B, at the time of filing GSTR 3B, at the time of filing GSTR 3B, tax payment is required. Tax payment is required when at the time of filing GSTR 3B. Understood or not? Then GSTR 1 is useful for what purpose? So for availment of ITC. So how to avail ITC? How to avail ITC? For availment of ITC. For availment of ITC. Which form will be used for availment of ITC? So this GSTR 1 not required. GSTR 1 is not required for availment of ITC. So but GSTR 1 data will be auto-populated in 2A. Correct or not? GSTR 1 data is auto-populated in 2A. For availment of ITC, please concentrate. If I want to avail ITC, what should I do? I should check. Registered person should check supplier's GSTR 1 data, which is auto-populated in 2A. So GSTR 1 of supplier will be reported where? GSTR 1 of supplier. From there we get auto populated data GSTR 2A made available to recipient. Is it clear? Sir, GSTR 1 will be filed by whom? Supplier. GSTR 1 is filed by supplier. When GSTR 1 is filed by supplier, from that GSTR 2A is made available to recipient. Based on that, recipient will file ITC based on GSTR 2A shall be reported in GSTR 3B. Is it clear? Understood the process? So what is the process here? That is, whatever is the GSTR1 of the supplier, it is auto-populated. It is auto-populated in 2A and is made available to recipient. Who will be making it available to recipient? By GST network. By GST network, they will be making it available to the recipient, and that recipient ITC based on 2A shall be reported in GSTR 3B. Is it clear or not? So this is with respect to GSTR 1 and GSTR 3B. So details furnished, what is the frequency, and what is the level of information that we report in GSTR 1, whether any tax is payable at the time of filing GSTR 1, and for availment of ITC, how this will be having impact. Understood or not? So this is about GSTR 1 and GSTR 3B differences. Now you would have got the clarity about when 1 and when 3B and why. GSTR 1, what is the frequency? Quarterly or monthly? But GSTR 3B always monthly, by 20th of the month following every month. Then what is the need of annual return? See, annual return will contain not only the details of this GST, but all financial information will be there in annual return. Entire financial information of the registered person. Entire financial information will be there in annual return along with reconciliation. What is that? Sir, turnover as per accounts and turnover as per GST might be different. Why turnover as per accounts and turnover as per GST is different? Because in GST, the way we arrive at the value will be different. Whereas regular accounts, how much is received will only be accounted as sales. But in GST, whatever is received and even whatever is the amount that is payable by recipient on behalf of the supplier to some other person, that will also come. Then like that, ITC as per books will be different and ITC as per this GST will be different. Like that, there are lot of expenses and the entire financial position of that registered person, GST department wanted to know. That's the reason why they will ask every person to file an annual return. Okay, then annual return, and there is a relaxation for 17, 18 and 18, 19. If they want to file, they can file annual return if their turnover does not exceed 2 crores. If their turnover exceeds 2 crores, then they need to file annual return for even 17, 18, 18, 19. From 19, 20, everyone is required to file annual return. Okay. So what is the time limit and what is the form? GSTR 9 is the form that is to be filed by 31st December of the succeeding financial year. Sir, what about a person who is opting for composition scheme? Long back we discussed. That is composition scheme discussion we made na. So CMP 08 by 18th of the month following every quarter, and annual return they need to file in GSTR 4 by 30th April of next financial year, and for them they are not at all required to file annual return for 2 financial years, 17, 18 and 18, 19. Then annual return is not required to be filed any year by 4 people. These 4 people are not required to file annual return. Who are they? Number 1, input service distributor, then TDS deductor, 5 people total. This you can remember with a keyword. This you can remember with a keyword. Remember with a keyword tonic. Remember with a keyword tonic. Who are not required to file annual return any year. Any year, okay, any year, who are not required to file annual return, because you will get confused. Sir, 17, 18, 18, 19 you gave something, that is only for 2 years. But thereafter annual return is required. But this is any year annual return is not required to be filed by the following people. Remember with a keyword tonic. T for TDS deductor. T for TDS deductor. T for TDS deductor. Then O for OIDR supplier located outside India and making supply to non-taxable recipient. N for non-resident taxable person. Then I for input service distributor and C for casual taxable person. So remember keyword tonic. So they are not required to file annual return. Who are not required to file? Because it's a important short note question that can be asked. Who are not required to file annual return? Remember the keyword tonic. T for tax deductor, TDS deductor. Then O for OIDR supplier located outside India who is making supply to non-taxable recipient in India. One OIDR supplier is required to pay GST under FCM. Now do you remember that import of services there we discussed. Then N for non-resident taxable person. Then I for input service distributor. Who is input service distributor also we discussed. And C for casual taxable person. So these people are not required to file any annual return. Understood? So then who is input service distributor? A head office which will receive the services and will be distributing the credit to the branches is known as input service distributor. We discussed it at the time of compulsory registration. Okay. Then, sir, there is some late fee given here. There is some late fee given here, and this late fee, how to remember, sir? Please listen. Actually, in your study material, one late fee is given. But here I gave a different late fee because this is only prevailing. The late fee right now is, in case of nil return, 10 rupees per day. That is, if you take both CGST, SGST, 20 rupees per day, subject to a maximum of 5,000 rupees. Other than nil return, 25 CGST, 25 SGST, subject to a maximum of 5,000 rupees. Okay, so like that we have. So now what you can do, this is the late fee prevailing now, but in your study material it is not updated. So what they gave is the old provision only. What they gave is the old provision only. So now you do one thing. You remember late fee as per study material. This is given latest. This is latest. Sir, is it wrong, sir? No, this is correct only. This correct only. But whatever we have in ICI material, that we need to remember for exam. ICI material, what is there? So this is only what you need to remember for exam. That is 10 rupees per day, 100 rupees per day, subject to maximum 5,000 rupees. This is under CGST Act and also under SGST Act. So this I have to pay under CGST Act and SGST Act. Is it clear? That already it is there in the heading. So you just remember this, that is sufficient. So this provision, whatever is there, that is actual, but that you don't have to remember. So 100 rupees per day, subject to maximum 5,000. This is under CGST. This is under CGST. Plus the same will come under SGST. 100 rupees per day, subject to maximum 5,000. Subject to maximum 5,000. This is under SGST. Sir, IGST, there is nothing. No late fee under IGST. No late fee under IGST. Is it clear? No late fee under IGST. Again I am repeating, whatever is there in the study material only I am asking you to remember. that is rupees 100 rupees per day subject to a maximum of 5,000 under CGST and same amount under SGST, but we don't have any late fee under IGST. Even if you have only interstate supply also, you need to pay late fee under CGST and late fee under SGST. Got it? This only you need to remember for exam. In case of annual return, 100 rupees per day, subject to maximum 0.25% of turnover in a state, this is under CGST and same amount under SGST. 100 rupees per day, that is common, and subject to a maximum of 0.25% of turnover under CGST, same amount under SGST. This is the late fee. Then listen to this. Sir, what about late fee for composition scheme also? Same. So whatever is the late fee that we have discussed, the same is applicable for even composition scheme. So what is that you need to remember? 100 rupees per day, maximum 0.25% of turnover, this is under CGST, same amount under SGST. Whereas here, sir, for exam, what is that we need to remember? ICI material. So this is for exam. What is that you need to remember? That is 100 rupees per day, subject to maximum 100 rupees per day, subject to maximum 5,000. This is under CGST and same amount under SGST. So kindly remember this here. Okay. This has the late fee. So what is the late fee? You need to remember. Divide into two. Other than annual return. Other than annual return, 100 rupees per day subject to maximum 5,000. This is under CGST, same amount under SGST. Done. Then what is the late fee in case of annual return? 100 rupees per day subject to maximum 0.25% of turnover, and this under CGST, same under SGST. Done. And in both cases there is no late fee under IGST. So late fee we have, even if you have interstate supplies, you need to pay late fee only under CGST, SGST. We don't have late fee under IGST. So this is the discussion related to the returns along with the late fee. Then have a look into the other returns. What are the other returns to be filed by a person? So a non-resident taxable person. So we discussed GSTR 1. We don't have 2, we don't have 3. But we have 2A. So whatever is GSTR 1 filed by a person, that data will be auto-populated in 2A. We have 2A. 3 we don't have, but we have 3B. 3B we have. So consolidated return. Then 4 is annual return. GSTR 4 is annual return to be filed by a composition scheme dealer. And 5 is by a OIDR supplier located outside India. Non-resident taxable person 5 and OIDR supplier located outside India 5A. Please check next page. Page number 124. Non-resident taxable person GSTR 5. OIDR supplier GSTR 5A. NRTP is required to file return by 20th of the month following every month, or 7 days from the date of expiry of registration, whichever is earlier. Every month they need to check that 20th of the next month or 7 days from the date of expiry of registration, whichever is earlier. Then OIDR supplier 20th of the following month. See, this late fee and all you don't have to remember. So because we remember late fee in a simple way, that itself you keep. And OIDR supplier 20th of the following month, not 7 days from the date of expiry of registration, because for OIDR supplier there is no expiry of registration. Then input service distributor monthly GSTR 6. by 13th of the following month. Tax deductor GSTR 7, then TCS GSTR 8 by 10th of the month following every month, and UIN, government departments and united bodies, UIN holder, they will get refund on inward supply. They need to file GSTR 11 as and when refund claim is made. So these are the other returns. You need to go through this and remember the due dates. So you need to remember the form, you need to remember who will file and what is the frequency. So this you have to by heart, no other go. Then there is a concept called as late fee, already we discussed. Late fee already we discussed. Now we will see amendment in return. What is amendment in return? Amendment in return means already I filed one return. Now can I amend it in the next period? Yes. But what is the maximum time by which we can amend it? We can amend it by due date of furnishing September return of the succeeding financial year or date of filing annual return, whichever is earlier. Sir, maximum by when we can do the amendment? Due date of September of the succeeding financial year or date of filing annual return, whichever is earlier, by that time we should amend the return. Understood or not? So due date of return of September or second quarter of next financial year or date of filing annual return, not due date, actual date of filing annual return, whichever is earlier is the time limit by which the returns can be amended. So this is about amendment of return or rectification of return, the time limit you remember. Then in the next page you can see outward taxable supplies to be entered in GSTR 1. From that discussion we can have it in the next class. From that discussion onwards we can have it in the next class, okay? So with this we have completed today. What is that? Composition scheme we discussed. Then I completed a payment process with all extra topics related to that. Then even we discussed one manner of utilization of credit, and then I started with the returns. All returns are over. Now we are left with one concept in the returns and past exam questions related to payment process and returns. So that is the discussion for tomorrow, and tomorrow our class is from same, because daily I want to take up to 12 and I want to complete the portion, that's why, okay. So tomorrow also our class will be from 7 AM to 12, and tomorrow we will be discussing the other aspects like what we have, miscellaneous topics we will complete, and then we will also be discussing in tomorrow's class invoice and time of supply. That concept we will be discussing, okay. That is for Thursday's class. Thereafter we will see value of supply and input tax credit. So that is 2 more classes we will be taking. Friday and Saturday morning session we have, that is 7 to 9:30. By Saturday morning session I will be completing the entire portion, okay. And thereafter we will be giving you, that is you take Saturday full day for preparation. So today completed, tomorrow it will be all miscellaneous topics, invoice and time of supply. Then day after tomorrow value of supply and input tax credit, because hardly it will take 2.5 hours to complete value of supply, then input tax credit. Thereafter next day, that is Saturday 7 to 9:30 we will be discussing input tax credit. Saturday will be the last class for our discussion, so the batch will get over on Saturday. Then Saturday full day you take for preparation. Saturday full day you take for preparation, and Sunday I will be giving mock test number 1. Mock test number 1 Sunday I will be giving. So you take up the test and you write the answers and you keep, and Monday I will be giving the video explanation related to mock test. Video explanation related to mock test, okay. So I am just giving you the details of the mock test here. See this, that is on Sunday onwards the mock test starts. That is 4th October, 4th October, 4th October, mock test 1, mock test 1. Then 6th October, mock test 2. Then next 8th October, mock test 3. Then 10th October, mock test 4. So these 4 mock tests will be given to you, and on that day the question paper will be released, and the next day, so on that day morning, in the Google Drive, already you have the Google Drive na, so in that Google Drive, so these question papers uploaded in Google Drive, question papers uploaded in Google Drive as well as in the app. Okay, suppose if you want to keep the mobile and see, if you don't have a laptop, so that's why I am just telling. So Google Drive or in app, in both places I will be uploading the question. Better Google Drive is sufficient here, app not required, because many students are not able to download the app, that's why. So in the Google Drive I will upload the question paper PDF. You keep the PDF of questions, you work out the answer. Time frame is very, very important. You keep exactly 1 hour 20 minutes, not beyond that. So you need to keep the time as 1 hour 20 minutes. As I am not checking your time, I am not able to conduct the exam. So that's the reason why you need to give the time as 1 hour 20 minutes. That is the maximum time. And I will be giving like ICI exam pattern only, nothing else, same pattern. So MCQ will be there, descriptive question will be there, and I will be releasing the questions. 4 mock tests on these 6 days, these days, 4 days, and immediately the next day you will be having the solution also. So if you have other subjects preparation etc. and all also you do, but maximum it's like 1.5 hours if you are spending, you are able to complete that na, for that reason. And next day I will give the solution in the next day, that is on 5:10, then 7:10, 9:10 and 11:10. I will be giving the answers. Answer to mock test 1, answers to test 1, then test 2, test 3, test 4, plus video explanation. Video explanation. I will be giving video explanation of that in the YouTube video. I will upload and you can go for it. You can see the video to know answers, so that whatever answers that you have written, you can cross check. And even I will explain to that, what are all the doubts etc. Everything also we can discuss in the video explanation. So whatever mistakes that you will do commonly, everything I will put. Even in the comments you can give your queries etc. I will revert to that queries. So this is the agenda. So by Saturday we will be completing. Saturday you take for preparation, quick revision. Sunday also I will give the question paper, but any day you can take. So it is like you are going to complete the portion. By the exam time you are expert in GST. That should be the target. Okay. Fine here. Then look into this few questions. If you have any queries, you post it, I will reply. Sir, late fee for GSTR1 as on today's date applicable, or CBIC will notify from when they will change late fee for GSTR1 as well. See, late fee already they notified. They notified in case of other than nil written as 25, nil written 10 rupees. But for ICI material, they notified it long back, but ICI material has only 100 rupees. So that's why you better take 100 rupees only. Then currently late fee is there. Currently late fee is there, Yashashvi, currently late fee is there. But only thing during COVID they have relaxed. But before COVID also late fee was there. For COVID they gave a relaxation. But before also late fee was there. But for exam you remember 100 rupees per day subject to maximum 5,000 or 0.25% of turnover. What if my supplier does not upload GSTR1? That we will be discussing in input tax credit chapter. If the supplier is not uploading GSTR1, then the recipient cannot take ITC, and how much ITC can be taken, how he will take, etc. we will discuss in input tax credit chapter. Okay. Then, sir, when lorry transport goods from head office to branch, lorry will not be treated as goods. Whether the transportation service provided by it can become supply? No, it will not. It will not become supply because they are not collecting any amount for transportation of the goods in the lorry. Sir, in registration, aerated waters will include in the list of tobacco products, ice cream? No, that is only for composition scheme. That aerated waters is only for composition scheme, not for registration notified goods. Then anything else? Okay, thank you. We'll meet tomorrow.